We live.
We are live. Yes.
Hey, let's start with the top story of the day.
Aaron,
did you see that? Wait, what were you gonna say?
I don't know what I didn't have anything clever to say. I was gonna think of something to say, but
I shouldn't have cut you off. It sounded like you were gonna do something.
I wasn't gonna say it. Aaron's weekend is what I was gonna say.
Oh, I had a good weekend. I was in Chicago. I meant to hit you up yesterday because you came down to Detroit for the parade, right?
I did not.
Oh, okay.
It was too cold, man. I didn't.
Now we have audio.
We don't have audio.
Should we restart that whole thing?
Oh my gosh. Okay, we had audio.
Oh, we had audio.
Okay, sorry. What's the top story of the day?
Elon Musk wants to fight.
He wants to fight Putin?
Vladimir Putin.
Wants to fight.
The stakes are Ukraine.
Dude.
And that wasn't even his craziest tweet of the day so far. So yeah, I don't know. I mean, I wrote an article about it. I thought it was funny, but let's be real here. I mean, I don't know who's winning that fight. Putin's former KGB, but he's like 70. Elon would probably realistically come with like an Iron Man suit or something, right?
I would hope so. He's basically the closest we have to Tony Stark.
Yeah, if you're Elon Musk and you don't have like some sort of an Iron Man suit, what are you doing?
But here's the thing, though. Like let's just say we were to like start taking odds. Let's just say Vegas takes odds. Okay.
Let's say.
Let's just say they do. Putin versus Musk. Who in their right mind is gonna like root for Vladimir Putin in that scenario?
Well,
like if I bet money on Putin, ipso facto, I have to root for him to win because I've got money on the line. Why would I do that? Why would anyone do that? Why would you root for Putin?
Yeah, I mean, unless you just think it's a smart bet, unless like you think there's value there.
But then you're like rooting against the world, aren't you?
Yeah.
What? So you can make a quick buck?
I don't know. I mean, again.
All right. Anyway, you know what? Elon has really been relatively tame on Twitter these past few months. I feel like there was a time there when he was just tweeting just crazy shit about his company, and he hasn't really been doing that lately, which is cool.
I still think my theory about Elon Musk like kind of being Tesla CEO, and he doesn't want to be like beholden to shareholders.
That was my hot take of the year.
Be beholden to the scrutiny, and he wants to be Elon unfettered. He wants to go be Elon and not have to worry about Tesla, but he can't like volunteer. Like he needs.
Yes,
he needs. Huh?
You mean leave the company?
Well, he can obviously.
He can do it.
I just think that looks worse than.
You know what this reminds me of?
What?
This reminds me of. Remember Magic Johnson?
Remember
Magic Johnson was the GM of the Lakers?
Yep.
And he quit.
Or maybe president of operations.
Whatever. He quit because as GM / president / whatever, he wasn't allowed to tweet and give opinions about other players and other teams, and he quit because he missed giving his takes on Twitter about the NBA at large. And this is what that reminds me of. Elon Musk just wants to like be himself, and he doesn't want the SEC breathing down his neck about stupid stuff. So my hot take a few months ago when the year started, I said I think that by the end of this year, Elon Musk is not the CEO of Tesla anymore. I stand by that hot take.
I agree. I would not bet against that whatsoever. I mean, you see what he's like willing to do, willing to say on Twitter. It sounds like he has other interests right now than running Tesla. He's not, and he's never been your stereotypical Fortune 500 CEO by any means. But even the biggest Tesla bulls, have gotten to a point where they're like, all right, come on, Elon. Like, you like he's crossed the line even with some of them. I actually watched for the first time yesterday, Enron, the smartest men in the room.
Smartest guys in the room?
Is that what it's called? Smartest guys in the room? Smartest men in the room.
Great documentary. That whole thing was hella confusing. It was Forbes, right?
Who made the documentary?
Who broke the story?
Fortune magazine.
Oh, it's Fortune. How the reporter from Fortune never figured that out is beyond me, because that stuff was confusing.
Well, it was.
I still don't know what Enron did. I've seen that.
Well, I just watched it yesterday. So Brittany McLean was the journalist. She basically wrote just a very kind of innocuous article. What the headline was, "Is Enron stock overvalued?" And she basically they did not put out balance sheets, and meanwhile they were at least part of financial company. They ran this whole energy trading side of their business, and basically she asked the question, as a financial company, how can you not put out a balance sheet? And they were putting out all these crazy numbers because they had what they called mark to market. So what they would do is they would say oh, we're gonna build this plant in India, and in 2030 it's going to make us $1 billion.
But they would realize
those gains now on a factory that wasn't built, the deal wasn't done, and so she basically literally just asked so how is Enron currently making money? We know how they're valuing things down the road, but they're not putting out a balance sheet. So how are they making money? And just asking that question kind of was the first domino starting to fall.
I didn't realize they weren't putting out a balance sheet.
No.
You can't do that now.
Well, now, and that's why. I mean, since Enron, I don't think any company that at that level can get away with that. But for some reason, they were able to do that, and it wasn't the biggest red flag in the world, and their stock kept going up, and they weren't putting out a balance sheet. But my point in bringing it up is there was, the CEO, Jason Skilling or something like that.
Jeffrey Skilling
stepped down, and they were all right, this is weird, because CEOs typically don't just step down for no reason. And that's where I think Elon would try to avoid just out of the blue saying, you know what, I'm done. There needs to be a good reason for him to do it.
He already has one. It's called SpaceX.
Yeah, that'd be a good out. Say, hey, I want to focus on all this talk about World War III made me realize how even more important it is for us to get to Mars. I'm going to go focus on SpaceX.
Yeah, I think he's pretty over Earth at this point.
Yeah.
Anyway, guys, smash that like button. We got a big show today. We're going to talk about IPOs with Matt Hammond. We have a new guest coming on the show in about 20 or so minutes. Ali from Investr Trades will join us here and share his charts for us. We've got Matt Hammond at 12:30, Jake Wujastyk at 1, and Chris Capre from the Benzinga Options Trading School at 1:30. So smash that like button, and here we go. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastyk from TrendSpider. We have a breaking news. I actually have some breaking news to report.
Okay.
Right now.
Okay.
Well, it's breaking as of a half hour ago. Does that count?
I really don't think I've seen it. So.
Benzinga's YouTube has crossed the 150,000 subscriber threshold. We are at 150,006. So, congratulations to us. Thank you to all of you who have subscribed to our little YouTube channel in this little corner of the interwebs. We couldn't have done it without any of you. Well, actually, we technically could have done it without 6 of you because we're 6 over. But
I don't think we could have done it without JP though. Jerome Powell.
No, without Pump and Powell, we would not. None of us would even be here, Frank. So the question I have for you all. I should maybe get in frame. The question I have for you is what do we do to celebrate? Because we knew this was coming.
I think we hold off on the celebration.
You think we don't do anything?
I think 250 is our next big milestone.
250.
Yeah, we got a ways to go.
Well, yeah, that would. I
don't think 200 is even that's gonna be fun. It's gonna be a big milestone.
So 150 is not big and is not a big deal.
100, 250. 500
million.
Well, maybe 750 would be kind of cool. No, 750 at that point. Once you hit the 500,000, then we're just looking for that milli.
Aaron Bryan says we should go to Vegas. Aaron, we are going to Vegas actually in May for the Benzinga Trading Summit. We'll talk more about that later.
Clean shave. I do need to shave. I can't.
Clean shave? No.
I can't grow.
Scruff is good. So, well, here's the thing though. We never, for the 100,000 thing, we never actually slimed Raz. We said we were going to do it, but he never showed up. But now he's here today. as you saw on live trading. So maybe we slime Raz. If you have an idea for how we should celebrate, send us an email. Oh, that's a good idea. Q. Wait, where's Q's thing? There we go. Pizza party. Shows at benzinga.com. How should we celebrate reaching 150,000 subs? If you think we should just hold off and wait till 200, 250, that's cool too. But I feel like we got to do something. Nice round number. Anyway, we don't celebrate ourselves enough, really. So good job.
Speak for yourself. I celebrate myself on the daily.
On the daily?
No, not really.
All right, that's fair.
Really.
What's going on with our screen right now?
But honestly, also in the thing, I'm not done talking about the Enron thing because I watched it and I don't think like anyone cares besides maybe you guys because it's
I care. I care about what you have to say, Aaron. Okay. I care.
Jim Chanos. They were interviewing Jim Chanos. He looked so young. I mean, it was like 15 years ago, but
yeah. Well, that's what shorting the market Tesla. For 20 years will do to you.
Yeah.
It'll age you a little bit.
But I do think there were like some. Whoa. What the hell just happened?
What?
My computer just literally.
Oh no! Aaron's computer just died.
What are we? It didn't die. It's been plugged in all day.
What are we going to do?
It's been plugged in all day. That
sucks.
I do think there were like some similarities. It sounded like Tesla. Like I don't know.
Wait. Tesla and Enron?
Like
you're not the first person to say that though. You're not.
I know Jim Chanos. Like I'm just saying. Like I wanted so fresh in my head. I watched it yesterday. Like I'm not saying that Tesla is like out there committing fraud to the extent Enron is, but like, has Tesla been accused of like kind of cooking the books or like doing like things that they can do to make their numbers look better than they actually are?
Are they both in Texas? They're both in Texas.
Yeah.
I'm just saying.
Oh,
I'm just saying.
Also, Ken Lay.
Yeah.
The former CEO.
Yeah. Didn't someone just got out of prison?
No, Ken Lay died.
Oh, well, Skilling just got out of prison like last year.
Maybe. He went to Mizzou and was in my fraternity. Not at the same time as me, but like before. And they still have his like picture up in the fraternity, like in like the Hall of Fame. And I was like, you guys might want to like take this down. He's probably not the best. He's like considered like arguably the worst like company executive of all time.
I'm sure I could find worse.
Yeah.
But he's up there. He's up there for sure. Anyway, it's a great. Where'd you watch it? Netflix? HBO?
I think it was on Amazon.
If you haven't seen Smartest Guys in the Room, it is one of the best
here's
market history documentaries that there is.
I was kind of disappointed with like I don't think in the first like 20 minutes of the film they laid out enough like context. Like I was like confused, like you said, like I was like confused. Like they just started like talking about the scandal without like clearly outlining like what happened. And like and at one point I was still like, I don't even know like Enron had so many different like parts and like verticals of what they were doing. It was confusing like exactly what Enron like what was doing and focusing on. Like it sounded like their like trading floor and like their vertical as a financial company was almost more in focus, at least in the film, than like the actual like energy production in terms of pipelines, oil and gas. We're Chaji, we're talking about the Smartest Guys in the Room movie. Old movie. I just happened to watch it yesterday.
Old
like
movie.
Just ancient. Have you guys been watching the Theranos thing? The show that
it's going to be the next thing that we're watching, but we just finished the Anna Delvey show.
That one was like
Inventing Anna.
That's not I loved it.
That was
like
that was like a recreation, right?
It's partial. It's like fiction-ish.
I kept seeing things about like that the acting was terrible in it.
Oh, I hard disagree.
Okay.
Really? I hard agree.
Really?
Okay.
It was. Listen, it was a Shonda Rhimes show. Like it's a little cheesy, but the story itself is interesting enough to make it worth it, I'd say.
I thought it was fantastic. I heard some complaints that it was too long. I thought it was just right. I thought it was great. Inventing Anna on Netflix, I thought it was fantastic.
And then I don't remember the name of the Theranos show, but I'm watching it on Hulu.
It's called The Dropout.
The Dropout. It's quite good, but it's also just like hilarious in the way that it's like, wow.
I'll have to check it out soon, like this week. Although I don't know if I have time because I did start a new show over the weekend. Not a new show, but the latest season of a new show. Drive to Survive. Who's watching with me? I'm 3 episodes in to this latest season. Formula One.
I'm 2 episodes in.
The first race of the season is this weekend.
That was
Yeah.
supposed to be the air horns, not that. Sorry.
Okay. In Bahrain, Drive to Survive is out. I've got my flunk, and I'm ready to see all-time highs. Who's with me?
I started watching the Drive to Survive like last year, and I didn't do a great job of like paying attention to it while I was watching it. And then I like would tune in and they'd be talking about like X driver, and I didn't know the context or background. So I think I would really enjoy it. I just need to give it another try and like give it my full attention for a little bit.
Kindred Duke says he already finished it. That's impressive. That's like 10 hours of streaming right there.
I will say, Drive to Survive is like the equivalent of watching like a sports movie that's like partially fictional and like told not entirely accurately. Like it's still really good story, and you can tell it's storytelling, but they like jump around in the timeline. Like it's not all accurate from what I've heard. Like they listed someone as winning one race, but it was actually someone else. Like it's not 100%. But if you just watch it like its own thing and not actually reflective of the Formula One season, it's interesting.
And it's not even really about who wins. It's about the story. It's about the
exactly.
it's about the drama. They're so good at building the drama. That's why I'm actually looking forward to whatever they do for golf, Aaron. Because
Well, I was gonna say, can you pull up Netflix's chart real quick? Because I was talking about Netflix earlier,
can do that.
and we're now more down. We're down more. We're down bad.
Whoa!
We're down horrendous.
When is the last time we were this low? 2016? No, 2020.
Netflix is more down bad than I was this weekend, and it's more 50%.
What does that even mean?
I don't know. It's like the new thing people are saying
down bad
on Twitter. Yeah,
that's the new thing.
Yeah, like
All
you're
right,
down bad.
What was the COVID low? 290 and a quarter was the COVID low.
Yeah, basically. Look, I brought this up on live trading earlier. This is like top of my watch list right now. I'm not. We say this all the time, right? It's impossible to time bottoms. You don't want to go out there try to catch any falling knives. I'm not going to do that. I'm going to wait. But once we start to, I don't even care about moving up. If we just start bottoming out and we start consolidating, trading sideways, I'm going to start accumulating a position. I have, like, this is crazy. We're down more than 50% off Netflix, like one of the biggest companies in the U.S. Top.
Yeah.
Top. I don't know.
Yeah.
Top something.
Top
50.
Definitely top. I was gonna say more. Yeah, it's top 50 for sure.
And then so like you said, Spencer. So we have Drive to Survive. They've seen the incredible success. Netflix has seen the incredible success with Drive to Survive. Is now going to bring that into different sports. Of course, the PGA one, which I don't know the exact timeline on it when it's coming, whatever. But
I don't know either.
I think the PGA one will be actually very interesting because you don't get a lot of behind this, right? With football, you have Hard Knocks. With other sports, you have some other access, but for behind the scenes golf stuff, and there's all these like different stories, whether it's the Bryson versus Brooks. And at the end of the day, people love sports. People love their teams. You want to see your teams win. You want to root for your teams, but like anything else, like sports is driven by the stories behind it, right? That's why it was such a big deal yesterday when Tom Brady decided to come back. It's not because of the football implications of, oh, now the Bucks are a little bit better, their odds to win the World Series are going up. It's the storyline that the best.
We know why he's coming back. It's because gas is so damn expensive that his kid's got to eat. He's got to feed his family.
Yeah. There's a lot of people speculating. People were saying like he, went on vacation, took some time off, then he got home and drove his kids to school for like a week or two and was like, this can't be it, right? Like, what else am I supposed to do? And so I don't know. I mean, I don't know about you, Spencer. I was actually shocked by that. I didn't peg Tom Brady as a guy to like pull a Brett Favre or a Michael Jordan. I thought when he was done, it was like a very calculated, thought out decision, had, full decided. But hey, even if you're the GOAT, you can change your mind.
Shout out to that poor schmuck that bought Tom Brady's last touchdown ball for half a.
Oh yeah, that's been the biggest story. So yeah, context if anyone hadn't seen already, on Saturday night,
poor guy,
literally the day before Brady announced he was coming back, a guy in an auction bought. Actually, I don't even know if it was a guy or a girl. Someone bought a Brady's quote unquote last touchdown pass ever, which came against the divisional round against the Rams. Bought it for more than $500,000. I believe it was $518,000. And the next day, Brady decides to come back. I would not be surprised if the auction house, whoever, voids it, saying, hey, this was listed as this. Now it's not this. That being Brady's last touchdown pass.
Look, if the London Metals Exchange can bust all those nickel trades from last week, then this auction house can bust that auction.
Yeah.
Saying it now.
And the other point too is, like, realistically, this guy's probably like a billionaire, maybe a huge Brady fan. There's a chance he was like more excited about Brady coming back than he was about the potential of losing $500,000.
Wait, can I just go back to Formula One for a second here? So my thesis on Formula One hasn't changed. The thesis was and remains that, driven in part by the documentary on Netflix, that the popularity of Formula One in the U.S. is going to increase at an exponential rate, and with that will come more revenue. The bear case here is that outside of maybe soccer, Formula One is the most truly global sport that exists. It's in every continent, and when you have a war happening like we have right now, there have already been major implications. Right, Formula One is going to lose revenue. They've pulled out. They've canceled the Russia Grand Prix. That's done. If you do see other parts of the world go into a recession, specifically Europe, where a lot of Formula One is where the majority of the races happen. If you see more tensions, if you see China begin to separate itself more from the rest of the world and sort of take sides with Russia more than they already have, that's a serious risk here. There's actually probably more or as much geopolitical risk to Formula One than there is to any other company out there. Because Formula One can't just, like, they can try to cut ties with Russia. They canceled the Grand Prix, and Nikita Mazepin is lost his seat, and so they can do things, but it's a truly global sport. Everyone.
Don't they have a race in like Saudi or somewhere?
Yeah.
Like yeah. I mean,
but
that's a good point. I never really thought
there is serious geopolitical risk here. So that's the bear case on Formula One, is geopolitical risk. Tensions continue to increase. That puts the sport in a really bad spot. That would be a not a good development for the sport. That potentially could counteract the rise of popularity in the U.S. So I have that on my radar as well.
What about if Netflix wanted the drivers Formula One? What if they wanted to get rid of the helmets? Because I've been hearing a lot, not me, but some of my female friends, like they really seem to think a lot of these drivers are attractive,
and that's the only reason they watch. Right?
These guys are hot. Yeah,
it's the only reason they watch.
Again, not me.
So I'm told.
But like, yeah, so I'm told a lot of these guys are hot, and like you got Lewis Hamilton, whatever, pretty good looking guy. Who's the Ferrari guy? Charles
Leclerc.
Yeah, the chicks love him, and who knows? Maybe it's because he's a very successful driver. Maybe it's because he's got a lot of money, or maybe it's because he's a good looking dude.
If I was trying to watch a sport for the looks, I don't know if I would pick Formula One because you can't see.
Well, that's what I'm saying. You get rid of the helmets, you throw some cameras in the car. Next thing you know, your female audience jumps up 50%.
And because you got the wind, the
number of dead drivers jumps up 50%.
Also,
that's not tomato.
No,
Rohan.
your viewers jump up from that too. People love a train wreck. You can't take your eyes off of it.
Hey, Rohan, can you help our next guest here? He's having camera problems.
Yeah.
Thank you. Appreciate that. I see you, Ollie. Back. Well, actually, I don't see you. That's the problem. But
this is actually kind of unfair. You shouldn't be allowed to look like this and be like millionaire world class athlete, right? You should get one or the other. Like, you can be insanely attractive or have all those other attributes. But
I'm more of a Lando Norris fan
Who's
myself.
that?
If you Google him,
Lando
I think he's like
Norris.
20. I think he's like 21 years old.
Oh yeah, good looking kid.
He's got those boyish good looks about him.
Yeah, look at him.
I mean, Lando's great, but Daniel Ricciardo, like,
Have you seen?
oh my god.
Carlos Sainz, like, all these guys are like,
Why are
they're
they
not
all
doing
so
bad for themselves.
Huh? I mean, he kind of looks like I don't know.
But
I'm
he's
still team
Australian,
I'm
so
still
that
team
helps
Charlie
too, yeah.
Ferrari.
Charlie Ferrari. All right. Someone's talking to us right now. I don't know what he's saying.
Yeah.
Okay. Let's bring. I think we should bring. We've gone way off the tracks here, but that's okay.
Before we get back on track, I'll just help Aaron Thomas out a bit. Either of you guys want side tie we're ordering?
Spencer can't eat Thai food because a lot of it has nuts in it.
I don't. You trying to kill me, man? I don't eat Thai food.
Do they have sushi?
Definitely not.
Okay.
Wait, I never talked about the Kura sushi thing, did I?
No, but
No, I didn't.
sushi sounds kind of good. I'm gonna try to get a roll for
I
sushi.
went. I put a 1 in the chat if you've been to.
Sesame chicken for me. All right, that works.
Put a 1 in the chat if you've been to Kura Sushi. It's a chain where they have the sushi on the conveyor belt that goes around the restaurant. Because I went the other week, I gotta say, not impressed. It's a public company. I'll pull up the chart right now. KRUS, and I think they have earnings like tomorrow. I think. Yeah.
Tiny Pie, do people in Ireland, when did they celebrate St. Patrick's Day? Because for some reason here we celebrate like the weekend before.
That was weird.
I don't know why.
Yeah.
Hope if Tiny Pie did celebrate St. Patrick's Day over the weekend, hope you had a good time. And anyone else who celebrated.
Anyway, I went to Kura Sushi the other week, and it was cool, I guess, but the food was really not that great. I got to be honest with you guys. It was just low quality. If I was going to go out for sushi, it would, if I really wanted sushi, I wouldn't go here. I would go to like a real sushi. It was just supermarket quality. You know, it just wasn't good.
All right. That's what I figured. I mean, I figured
Yeah.
it's more the experience. Dude, anytime you go to like a chain restaurant that tries to be like more, like more than
gimmicky,
fast casual.
Gimmicky.
Yeah, like even also in Troy they have the what's that steakhouse called? Kona Grill. It's like not that good. Like it's like fine, but it's not like you spend so much money there. I don't know. I just don't think it's good.
That's the word, novelty.
Yeah. All right. First guest coming up, Spencer. Who is it?
Oh, I didn't know that conveyor belt sushi was mediocre. I didn't realize that. Sorry. Now I know. Investr Trades.
Ollie, aka Investr Trades.
That's his real name, Investr Trades.
Oh, okay.
I
Well,
think.
Ollie, what I was gonna do is I was gonna just real quick before we bring him on, power rank all the Ollies that I know.
How many Ollies do you know?
Which is 3. So all right, top of the list.
Wow. All right.
Ollie, aka Investr Trades, coming on.
You don't even know him yet, though.
Yeah, but
all right. Okay.
Number 2.
Yeah.
Ollie G.
In the house. Okay.
Shout out Sacha Baron-Cohen. How do you say his name?
You got it.
All right. Number 3, Alibaba, coming in dead last.
That's good. That was good. Ollie, aka Investr Trades, how's it going, man?
How you doing, guys? How's everybody doing?
Doing fantastic. Having a good morning so far. Having a good start to the week.
Not bad, not bad. You know, we had that early sell-off, took advantage of that a little bit, but staying in here still, man.
Do you want to? If you want, you can share your screen and we can see what you're seeing. But
awesome.
Tell us what you making any trades today?
Yes. So let me share my screen here with you guys. And you know, this market has been crazy volatile, but we like that for day traders, right? So let me see if I can share my screen here with you guys, and I'll show you one of the trades that I made. Perfect. We'll pull up this one right here. Looks good. You see the screen? I think it's good.
Yeah, I'm seeing a lot of different charts though. So
perfect. I'll walk you through a few of them here.
All right.
One of the main things that I focus on that that's proven to me over the past 8 years that I've been trading is simply just levels, man. And that's mainly what I really focus on. One of the trades we took today was QCOM. You'll see it in the bottom left corner of the screen here. And I'll tell you guys why it was on my watch list and why I was looking to trade it. All right. First of all, we have an aggressive sell-off. We penetrate the 200 moving average, pop back up. We see this resistance, and we put in a bearish engulfing. So these are the little things that I pay attention to, right? Bearish engulfing pattern, breaking back below that 200 moving average, engulfing the last prior 2 days bodies essentially. And what we were looking at here in the pre-market was that we had some nice solid support at that 150 psychological number. So if that snapped, I was going to get involved in some puts, and we did that, took advantage of the move down here, and that's a trade that I took that actually paid out very well. Unfortunately, on the other side, I got involved on calls here because I have these 146 support levels. Again, like I said, it's all about levels for me. I had this 146 support, prematurely cut the trade, and it did rip right back up exactly to that top side 150 psychological number again as well. So that was one of the trades we took, and I really focus on these H patterns, right? For those of you guys that are watching, these H patterns have become my kind of bread and butter in the last few weeks, or last few months actually, with the market kind of selling off. And they're just essentially, all they are is we have a big sell-off, a pop-up, kind of failing to hold, and they just kind of roll over again here.
What do you typically trade? Do you have like a go-to group of stocks, or do you trade anything, or
No, I trade a variety of things. I spend almost about 2 hours every night going through a scan that I do, and I scan a bunch of different varieties. They're usually volume filters that I search for, and ATR. So I'm looking for things that have volume on average at least above 500K. And I'm just simply looking at starting from the dailies and trying to see, hey, if this major support level snaps to the downside, I'm going to take advantage of the move on the way down, right? That's simply everything that I'm kind of paying attention to. Another one, if you take a look at Zim on the daily here, this was a great one. This is something that, I've been paying attention to last few days. We have this nice consolidation in this little box. And as soon as we break these all-time highs, the next area of resistance really becomes the Fibonacci levels, right? A lot of people ask me, what are we looking at once we break all-time high levels? How do I know where to exit the trade? And you guys really got to get into the habit of using Fibonacci's. And this is exactly that 8277 level. It looks like I just drew it out of nowhere, but if we use Fibs here, you'll see that, the most recent pivot high to pivot low, you'll get that Fibonacci right there at around that 8277, 8290 level. So I just like to remove them to keep the charts kind of clean. And that right there, you're seeing a little bit of resistance right there at that level. Right.
Well, how long are your trades typically? Are you doing intraday stuff, or?
I want to say the last 2 months where things have kind of been a lot more volatile, or sometimes just stuck range bound. The trades have taken anywhere from like 15 to 20 minutes. Again, I'm more day trading now simply because of the volatility that's been going on. But, going back to or leading up to November, I was putting on quite a bit of swing trades. And, when the VIX is very low, that's when I feel comfortable putting on swing trades, where we don't have those crazy volatile pushes in the pre-markets, the gap downs, the gap ups, because those can all affect options premium and, leave a lot of uncertainty on the table. And I don't like to kind of be involved in that when I'm swing trading. So my last swing trade was actually November 15th, I think, November 20th. And I haven't really put on a swing trade since then, simply because
what does a swing trade mean to you?
So a swing trade is something that, I find a pattern on the daily level. And once I get involved, I have a pretty wide area of stop based on, moving averages or that pattern itself. And that swing trade will usually pan out at least, 5 days to maybe sometimes 3 weeks.
Okay. Are you using actually like hard physical stops right now, or mental stops, or what?
Right now, I'm using mental stops. But again, that's something that I've kind of learned to train my brain to kind of be able to exit the trade with mental stops. But every time I've spoken to any new traders, I always recommend them, hey, listen, if you're new, you have to kind of disconnect that mental, emotional aspect where your brain's going to fight your finger from exiting that position. So I always recommend using hard stops if you are a new trader in the market. But if you're someone who's a little bit more advanced and you're able to kind of trade with less emotions, then you're very easily able to stop out with a mental stop.
Yeah, I've always been like a physical stop kind of guy, but like I gotta admit that it's tough right now, right? Because your stop, when you're in a a choppy market like we're in, you just get hunted and you just get stopped out left, right, and center, and nothing you can do about it. So I've even gone away from that on a couple. Not that I'm not like the most active trader,
Mhm.
but the recent trades I have made, I've been not. I've been like, I don't automatically now go and set a hard stop.
Yeah,
I think
and
I think twice.
that's mainly, one of the other reasons why, I haven't put on swing trades is because of that
Yep.
volatility, and the stops kind of getting triggered and getting hit, and then the move is kind of happening after the fact. That's why I've kind of stayed away from that. So it's hard in this market, like you said. Things are so choppy. Unfortunately, today, like I said, I pretty much bottom picked this little support area on QCOM. And then once I got stopped out, unfortunately, I did decide to run about 40% in options. But it's the way it is. And at the end of the day, we have to kind of have some rules and things that we need to respect. Otherwise, if we're not following rules and if we're not respecting our game plan, things can really turn around and get pretty ugly. So we have to kind of focus on that.
So maybe you could walk us through some of your process more. So you sit down every night and you're going through a scan, some sort of proprietary scan that you're running, and that, I assume, gets you some ideas
Yes.
enough to pull up the chart on the screen.
Mhm.
Then what do you do from there?
So usually
let's
the
maybe
night before, so if I get to
yeah,
detail with it, I pull up my favorite chart
sure.
scanning software. I put a few filters. I'm looking for ATR, anything. So ATR means average true range. Anything that is above 0.75, meaning the stock on average will move anywhere from 75 cents plus. Then I'm looking for stocks that have an average volume of above 500,000. So what that does is that tells me I'm looking for stocks that have volume, that have liquidity. Then that's where my filter is, and I filter that based on the amount of volume those stocks has had, and now it's sorted by volume, highest volume first. And I simply go down the list of, let's say I have, sometimes there's like 25 pages, and that's why it takes me so long to go through them, is because I go through different tickers. For example, QCOM was on one of the lists, and I knew I had this bearish engulfing. So I said, all right, we have a bearish engulfing. We've had significant sell-off happening. Usually, what happens after bearish engulfing is continuation to the downside. And also here, I can see that we've had a sell-off, popped up, failed to get over this 160, and we've rolled over. So the chances of coming back to this 147 is very highly. So I put this on a watch. Another one that I've had on watch was Netflix, right? Again, why Netflix? Well, we have this pretty bearish candle that took place on Friday. This 340 level is a big area of support for me. If that snaps, we're gonna come down a little bit lower. So I put that on a side watch. So I go through these 25 pages. I accumulate about maybe 12 to 15 stocks, and this is the night before. So once I've done that, I turn everything off, I go to bed, and I wake up in the morning and I go back through that list and I check the pre-market levels, right? So like I said, remember with QCOM, we knew we had a downside move, but what's really gonna make that really snap to the downside? And we see in the pre-market, although very light volume, there is some support at the 150 psychological number. So that's the level that I was keeping an eye on. So that's how I come in and I kind of fine tune that big list that I have to give myself a game plan for when the market actually opens up.
So are you only paying attention to the price action, or are there other things you're watching, be it options flow or news or I don't know, anything else?
Yeah, so usually when there's pre-market news that takes place, we'll know due to the price action that takes place. QCOM, obviously nothing really there that was news related, but I do often look at options flow as well. I look at unusual options activity. I take a look at what we're looking at in regards to the market. Not so much that ticker that I'm looking to trade, but I keep an eye on options flow for the overall market. So aside from all these charts that I have, I also have two other charts that have the Qs on there and the SPY. So that's when I'm looking at options flow, I'm trying to get a sense of, what are they trying to hammer home with in regards to the SPY, in regards to the Qs? Are they buying a lot of puts for that given moment? Are they coming in and kind of dip buying at certain levels? Am I seeing a lot of call flow come in at key support levels? that's the kind of thing. There's lots of things that kind of work on my screen, and I try to keep up with as much as I can. But ultimately, what it really comes down to is I need to know my levels. Then I can look at options flow and say, hey, this is a level of support that I have, and this is where I'm seeing a lot of call flow come in, because they're starting to kind of pick this up and buy these levels and expecting a higher move, at least in the short term.
Wait, I just had a question and it just escaped me. Holy cow. Oh yeah. So do you, like, I guess as far as the time of the day that you trade, is there, like, do you trade all day, or will you stop? Will you trade the open? I assume you also trade the close as well. Do you trade midday? Do you stop?
So my main most successful trades take place within the first hour.
Right.
And one of the big factors for that is, once the market kind of opens, we have a lot of volume that comes in. And, if key support levels break, there's stops being triggered. There's lots of orders coming in, and it's very hard for some people might not take this the right way, but it's really hard for market makers and algorithms to kind of get involved and kind of chop you out. So in the morning, because of that volume, the algorithms and the market makers can't really play a big factor in it. So you're able to get in and out, especially when key levels break. So after that first 1 hour, when you have a lot of investors kind of walking away from their computers, and people are on lunch coming into that 11 o'clock area, then you're really just playing against algorithms, computers, market makers, where they're really designed to just simply essentially take our money as retail traders. So you have to be that much more disciplined. You have to have a lot more patience to kind of sit through that up and down to make sure that your plays actually pan out. So the first hour is really what I'm getting involved in, and very rarely do I come back at around 3 p.m. unless I see good levels, good key areas being broken on the SPY or the Qs.
Interesting. So you're when you walk away at 11 o'clock or so, that might be it for your day.
Yeah, I mean, I don't walk away. I sit here and I look at monitors and I try to find something that's of quality, but it really needs to check off a lot of things. The pattern needs to be there. The volume needs to be there. The momentum needs to be there. And oftentimes after 11, when it gets really slow, I can't check off all my checklists for me to initiate a trade.
Nice. And you said you've been training for 8 years. Is that right?
Yes, for 8 years. Actually, on February this year, I crossed 8 years. And it was a roller coaster ride, man. First 2 years, I literally lost everything I had. Third year,
I was going to ask, how many accounts did you blow out?
So my first account was about 25,000. And when I first came into the market, just like everyone else here, we all started on YouTube. And, I watched a bunch of YouTube videos. And at the time, there was a lot of low flow craziness going on, and people were making money on low flows. So I'm like, you know what, let's do it. I had my life savings. I put it into a TD trading account, and it was great. First week I made about 5K, and then I was like, awesome. So at that time, I'll never forget, I had, reached out to my buddy. I said, listen, man, it's my first week. I've made 5K. Let's bring in some more capital. So we bring in more capital. We're sitting with an account of about 50K at this point. Unfortunately, the money that he had brought in was from his mother. So long story short, the next week I blew through that 5,000 that I had made of profit. We started dipping into that original 25,000 that we put in. That was just shrinking down, and it came to a point where there was only $5,000 of my actual money left. And thank God, I was like, all right, you know what, man, I think it's best we take your mother's money out, we give it back, and we really buckle down and try to understand what's going on. So that was the first account I blew. After that, I tried to fund accounts. I think I went through a total of 3 big accounts and maybe another 7 or 8 small accounts, to the point where I'm like, all right, I'm not going to put money in the market. I'm going to spend the next year or so just staring at charts, learning mental trading, paper trading, until I accumulate some funds to actually put into another account that's going to work. So I was able to do that. Here in Canada, we don't have PDT, so I didn't have to worry about coming up with another 25,000. So I started back up with another. At the time, it was 7,000, and I kind of worked my way up from there. But that was after 2.5 years since I blew that main account up.
Wow, that's a really good story. That's
Yes,
a really
it
good
was
story.
a journey. But I mean, every single trader we speak to has their own journey, and at the end of the day, nothing comes easy, right? So we have to. Every time I look back on the amount of money I lost, I think of it as, I went to college, I went to university, and the amount of money I blew, going into those fields, it is a fraction of what I paid to the market, essentially, right? The market.
You paid for your education. That's what
Exactly,
you paid for.
right? And
Yeah,
the only way we're going to learn is if we actually try it. Like before when I first started, I spent months on YouTube, and I thought I had the education, but that education doesn't come until you really put your money and your emotions at the market, and really that's when things really start panning out.
Awesome, Mr. Investor. Thank you for coming on Benzinga Live today. Tell the people where they can find you.
You guys can find me on Twitter at Investr Trades. You guys can find me on TikTok. I have a bunch of videos on there. You can find me on YouTube. Just search my name, Investr Trades or Mr. Investor. I try to help you guys out as much as I can. I know the community when I first started wasn't really there. So I'm here to answer any of your questions. If you guys do have any, reach out to me. I'll be more than happy to help you guys out. And as always, Spencer,
links in the chat. Links in the chat and description. Ali, our favorite Ali, is everybody on the show. Thanks for coming on.
The third one being Baba.
The third one being Baba.
Yeah, we're not a fan of that Ali right now. Down below, I think it dipped below $80 at one point this morning.
I think it got to 80 on the button.
Crazy. All right, Ali. Till next time.
Ali.
Thank you so much, guys. Have a wonderful day.
All righty, you too. All right.
I will mention I did forget Ali Marpit. He's a football player for the Buccaneers, or he retired actually, but maybe he's coming back now that Brady is.
What is that? Okay, I don't know who that is.
You should, because he's one of the only Jews in the NFL.
Really? There's Jewish football players? I didn't know that. All right. Anyway, it's 12:20. Let's real fast. Alibaba's at 79, so we'll talk more about that stuff in a little bit. All right. Matt Hammond is here with us. IPOwarriors.com, and I think he's doing pretty well, all things considered. I think he's let's let Matt tell us about it. Let's bring Matt on the show right now and tell us about IPOs and how things are going over there. Matt, how's your connection? Are we okay?
Kind of in and out here. We're adjusting to our Airbnb here, and we're down in Portugal now, and try to get the lighting in the anyway.
All right. Well,
it's been.
You look good. You look good. You sound good. You seem like from your email. You seem like from your email that you're less stressed now than you have been at any point in the last few months.
Yesterday was just a moment to finally relax a little bit. We got the dogs out of Ukraine.
Nice.
Kind of an epic journey to get them from Lviv. A friend brought them to Budapest. I took them by train from Budapest to Munich to Paris.
Oh my God.
And then flew down to Portugal for whatever reason. We decided to, kind of first stop Portugal. And now, you get through that, and then that took like a week. And then, now it's Monday. The market's not doing too well. And on top of that, you're trying to figure out, where you're going to live, sleep, what you're going to drive, where your kids are going to go to school. A lot of stress just kind of waiting on the doorstep. So try to turn it off a little bit from time to time. But, there's other people who have been put in far worse situations than we are. We've been overwhelmed with all the support. And, I've slept at complete random strangers' houses over the last week with my dogs. Wow. Had to leave my dogs for a couple of days with somebody's just kind of friend of a friend while I flew back and took care of some paperwork with my wife and our residence permit issues. So this war has been very chaotic for everybody. Certainly people like me who live there, we've had our lives upended, but we have to be sort of grateful for the little bit of a safety net that we have, the support of lots of other people, and just try to not get overwhelmed by it all, and focus on kind of like, all right, what are my priorities? What's the next step? Let's let's reach out to people who might be able to help, and develop backup plans and backup plans until something falls into place. So yeah, I'm far from relaxed, but
all right. Well, I mean, that's totally understandable. But I mean, at least you're all together now, and we talked the other week about the markets being, like, for you, like a welcome distraction, right? It's something else to think about other than just like all the stress.
Yeah, and at times there have been some kind of bright spots, and then there's some but yeah, it's not a great market to be trading in. So I'm just sort of, for the most part, holding on to spots and letting go what I can if I get any kind of green light on them. But yeah, the market, sports, I mean, sometimes walks. We live right next to the beach, which is nice. Walks on the beach, having my dogs. I have, beautiful daughter. So just kind of trying to simplify things a little bit, focus on what, just some of the moments, and then come back to the stressful parts and pile in on that. But yeah, the market, getting to research, anything that takes your mind off the immediate stress for at least a little while, kind of helps you be a little more focused when you come back to, the serious elements of life that we're having to plan for. That we, 3 weeks ago, we were just relaxing up in the mountains and relaxing, but things have changed pretty dramatically, and now we are safe, but safe but not settled. So it's a bit of a strange.
Well, we are very glad. We're very glad to see you, to hear from you. We're glad to know that your family is safe and that you're together, because you, as you mentioned, you had to leave your dogs behind. So we're glad that you got the dogs, you got the family, you're in one place, safe.
Check
So
the important things.
Exactly.
But
all right.
I'm also, and this we could segue into, it's also nice to see that at least some IPOs feel brave enough to kind of dip their toes back into the market. And as I've said many times before, I think there's been about 2 or 3 lulls in IPO trading since we started this show. And each time there's a lull where the market's just too cold or chaotic for IPOs, especially mainstream IPOs, to debut. The first ones that come out of the gate tend to be good ones to play. And that goes for both the random low float IPOs that kind of are less, I think, discerning when it comes to market conditions. They're kind of like, whatever, we're just raising $20 million. We'll sell 5 million shares at $5 a piece or $4 a piece, whatever. And that's all we're trying to do as a company. Mainstream IPOs, those that go live in cold markets, tend to be, I think, very well priced for retail consumers. And we saw that with CRDO, which is still one of the only mainstream IPOs that went live this year. It ended up debuting, I think, at like 13, dropping down to kind of 10, 11, and is now up, has since run up as high as 17 or 18. So these are interesting times to be paying attention to the IPO market. And last week we saw a really good example of that phenomenon with the Marigold companies, MGLD. So MGLD IPO'd at $2 with, I think it was 4 million shares. Or no, this was an uplisting. They did like 1.6 million shares, and it looks like on day one the uplisted shares were not trading because the the float was, or the volume was only, say, 200,000 shares. And you see this day one over here. It debuted at a slight premium at 244, but then traded down in kind of the 205 to 220 range all day. And this is the kind of setup where, recently we've seen this as a great opportunity to accumulate shares for a day two pop. Ideally, you're trading in an account like Webull, where this part was very predictable. This part, not as much. That it spiked not once but twice. once right at the 7 o'clock bell or 7 o'clock open, and then again on the opening bell, ripped from about 350, 360 up to up over 7. But this initial move here has become rather predictable. And if you're trading with a Webull account, you can accumulate here, and then you're in a position to exit there for potentially a huge win. So those setups we like, and it kind of just showed again that when we haven't seen IPOs debut for a while, the first ones out the gate we saw this was HOUR. Was I think the first IPO this year that came after we had that kind of lull at the end of the year and didn't have anything come in the first week of January, and then Hour came out, debuted at something like 3 or 4 and ran up to 10. So that one happened the same day. This one took a little bit of patience, but we've seen a lot of that recently in the uplistings, in the low float IPOs, where day one becomes a little bit of a dip and accumulate play. And then day two, especially in the early pre-market, we've seen spikes that have been great opportunities for 100%, 200% wins. So keep an eye on those. Right. I'm not sure we're going to see that in what we've got on the calendar for this week, but you don't know. And if we do see drops, then on day one, towards the end of day one, if it's still dropping, it's kind of a nice little lotto play to consider. So
yeah, Matt, we are getting a little bit of background noise coming in.
Sounds like some serious construction.
Yeah, we got a neighbor grinding up. I guess the tourism. Let me close the doors here. The tourism industry.
Oh wow!
Summertime is just around the corner here, and this is, I guess, the Algarve. Algarve, which is the Portuguese sort of beach resort area. So,
wow, nice.
Still kind of cool here, and we had rain this morning. But some days where it's been sunny, it's been nice.
Have you been surfing yet?
I have not had time to surf at all. I have reached out to some people for wetsuits and boards, and there might be some things coming together, but it is comparatively a very low priority compared to.
That's fair.
Totally some other fair. Things like so I will relish that moment when I get in the water, but until then, it's we're just we're still in survival mode, and that's taking all my time and energy at the moment.
Fair enough.
Yeah. So we got 2 IPOs this week, at least that are on the calendar. It would not surprise me if these get pulled again. The first one is Aconda, AKAN. This one's been rescheduled a couple times now. Bit of a, I'm not sure I like this company too much. What is interesting is the underwriter. This is a UK-based marijuana grower that has ambitions to set up growing operations in Lesotho, which is a little country kind of inside of South Africa. And they're kind of planning to grow marijuana where it grows kind of rather easily, I guess, and then export it to the UK market and globally. They don't really have revenue yet. And one of the things that I don't like about this one, although it is rather low float, and Bosted has had quite a few IPOs that have run not as combustible as what they were doing a year ago, and maybe they, the last few that they've done have failed to generate the kind of movement that we used to see. So I don't think traders are just saying, just play everything Bosted at this point. So one thing I don't like is a clause in the F1 filing that basically says that the representative may, at its sole discretion, at any time without notice, release some or all of the shares subject to lockup agreements prior to the lockup period.
Whoa. Let's read that again. Now.
Representative may, in its sole discretion, and at any time without notice, release some or all of the shares subject to lockup agreements prior to the expiration of the lockup period.
That seems a little bit shady.
So we've seen.
What is the point of the lockup?
Yeah, I don't understand quite if it's like why they even call it agreement. They just call it standard lockup, expiration period. But yeah, it's basically saying, we're coming live we're selling 4 million shares to the general public, but if the price goes up, we're probably going to start selling more shares. So that to me sort of negates the low float, the low float setup. It doesn't mean that they will. They could do the opposite. They could, we've seen companies go live like AERC just wouldn't sell any shares, and it debuted at, after pricing at 10, debuted at 40, ran up to 100, bounced around between like 60 and 100 for a few days, and then they came and sold off all their shares, and it's probably at like $2 or $3 now. So you just don't know. And in this market, I don't see a bunch of people flooding into these on day one. It just kind of seems like everyone's either seeking shelter, playing a few that already, like Mullen Auto has been kind of in the spotlight the last week or two. So people are keying in on the low float IPOs, but they seem to be picking one or two and sort of day trading it to death. And these IPOs, MULG or whatever that one was, MGLD did get pumped, but day two it did a little bit of a spike in pre-market this morning and has since kind of gone to bed. So I think the play on both of these, if you are watching them at all, is not to get in early, to see if they kind of dip and trail off into the end of day one, with the possible accumulation for an early day two run. But that is the only play that I've seen consistently line up this year, and that would be, I'm not in a position to really trade these right now. So this is all just ideas. It's certainly not financial advice, but accumulate on day one, sell on day two. That's kind of been the setup that we've seen. Genius Group. This is the second IPO of the week, and this one is still available on Webull. So it just kind of tells me that retail investors are not just diving in to buy anything right now.
I can confirm I'm getting those alerts, and I'm not doing anything. I'm not doing anything with them.
Right. So this is an ed tech company based out of Singapore, which at first piqued my interest because, I thought maybe there's a China connection. Maybe it's a stealth IPO with all the uncertainty about what's going on with Russia and China's kind of alliance, or presumed alliance, or rumored alliance with Russia. Maybe there's more wealthy people trying to get their money out. But I looked at the executive, list of executives and didn't see anything directly tied to China. They do online and in-person educational services, and they have some pretty big name clients like Deloitte, J&J, Vodafone, Google, IBM, Heineken, Lenovo, DHL, HP, and a bunch of others. So it's kind of an interesting company, I think, in the sense that maybe a year ago when IPOs were a hot trade, this might have been an interesting IPO. But since not right now, and it's 7.27 million shares is not really low flow enough to be. It's kind of that's a really low float for like a recognized brand name company that's producing a lot of like Monday.com. They did 5 million shares, and that's people know that company, people use that, and they maybe not profitable, but they have substantial growth and revenue growth and profit growth, where this company, their revenue is up 40% in the 6 months ending June 30th, 2021. But, so that's compared to the first 6 months of 2020, which, as we've talked about many times before, is a little bit misleading. And 40% is not all that impressive when you're talking about something that either could be positioned as like tele-learning or virtual learning, or otherwise. I mean, that we've seen really ridiculous revenue numbers when you're cherry picking those first 6 months of COVID. Gross profit is down 26% in the 6 months ending. So that to me is sort of like, I don't, with negative baseline financials, The underwriters think equity, and I didn't find any direct ties to China. So unless this turns out to be kind of a stealth money laundering type thing, which just doesn't look like on the surface, this one's probably not one that I would be too enthusiastic about trading on the debut. And even as a day 2 setup, I'd really need to see like a very low volume traded on day 1 with a substantial drop off. Then maybe you consider it, but certainly not with a big play. And I don't know. Ed tech just hasn't done all that well since it, since China came out and said, education has to be private. It kind of had a sweeping negative effect across not only the Chinese educational ones, but even the Duolingo and some of the other non-Chinese educational startups or educational tech companies have mostly just fallen pretty hard below their IPO debut pricing. So anyway, that's what we got for this week. Still seems like we're a ways away before we see any mainstream companies try to IPO. I believe that until the crisis in Ukraine settles down and until we get a firmer grip on inflation, you're just not going to see basically startups or growth companies, which IPOs are almost categorically defined as. I don't think we're going to see very many of those go live. So now's the time to, I think, learn other strategies to sit on cash, maybe build small positions in stocks that you like coming out of this whole downturn. But the IPO trade at this point is pretty much look for the low float ones, look for the up listings, be patient on day 1, accumulate a little position and be ready to dump it on a spike on day 2. That's been a pretty consistent play.
Well, Matt Hammond, it is a pleasure to talk to you more so now than ever. I look forward to our emails just so I know that you're doing okay, frankly. Not as interested in the IPOs, more so interested in just making sure you're good and you're in the family, you're good. So
that is the craziest piece of this whole reality is just the fact that people hearing from me and knowing that I'm okay and not in a war zone is like a real piece of correspondence.
Yeah. Hey man, you're out of the war zone, which is good. But as you said, that doesn't mean the stress is over. So I guess keep on keeping on, man.
Right.
And we'll talk to you next week. And I mean, thank you for joining us. And
the newsletters are going out again. You guys sign up at IPOwarriors.com. I'll be writing up these trades in the newsletter, a little bit more color on those. And did the review newsletter for last week, sent that out yesterday. So newsletters are back on track. I'll be tweeting again a little bit more. I'm starting to settle back into what I hope is a little bit of a normal life. But
excellent.
Yeah, this all helps me feel just a little bit more kind of calm and normal about things. So thanks, Spencer.
All right, Matt, have a good one, man. Be good. Be safe.
You too. Cheers, guys. Bye-bye.
All right. Always good to. I look forward now to our emails every week because I just like to know that he's doing okay. But like, man, I can't even imagine.
Yeah.
Props to him for just holding it together. I'd be a freaking mess.
I mean, crazy story, but like Matt said, I mean, it's sometimes, we were talking about this when the war kind of first started unfolding, that there are bigger things than the stock market. There are more important things. And it was hard to even talk about the stock market that day. But like Matt said, I'm glad he's finding some solace in having a little distraction from everything going on, and kind of a lot of times when there's something like that going on or anything, work or whatever it is, can be a nice little distraction.
For sure. So our next guest is backstage. We're going to bring him on in a couple minutes here. Steven Sauls is the co-founder and CEO of Rivalry. We're going to talk sports betting. Well, not just sport, just online betting and gaming in general right now. And the state of that and what's going on there. Rivalry's doing some cool stuff. So we're going to have Steven on in a few minutes. We still haven't really gotten to the main topic of the show today, which I thought we would lead off with, but then we ended up talking about all sorts of crazy stuff here. But I didn't want to talk about China because it's just more pain. Aaron, I was looking this morning. There are 2 Chinese stocks that are, I guess there are 3 actually. 3. We'll call it 4, but there's 2 that you've heard of. 2 Chinese stocks that we've heard of that are trading up in the last month. Can you guess what they are?
3 Chinese.
2.
names.
There's two that like you would have heard of. One of them is like definitely if I say it, you'll be like, oh yeah, for sure. Those
JD.
guys. No. I'll give you a hint. Solar. Does that help at all?
No.
Jinko Solar, JKS. Okay. That's like a relatively obvious one. Jinko Solar, and then Jobs, JOBS, which is 51 Jobs, which is like this HR company. Every other Chinese listed ADR in the US in the last month is trading down.
And we'll get,
it is insane.
We'll talk more about kind of what's going on with China and the Chinese stocks after our next guest, Steven.
It's ridiculous.
But yeah, Spencer, I mean, it's getting to a point, and like I said, we'll talk about it more, but this whole shutdown we can talk about with Apple trading lower because Foxconn is shutting down. We have to provide some context, right? Like,
Sure.
Was Apple affected in terms of revenue or sales or anything when the Foxconn plant shut down from COVID 2 years ago? No. So now that it's Omicron coming in, do I expect it? But now you also have these other factors, an existing supply chain crisis, the war going on. So we'll have to wait and see. But I'm honestly not too worried about the new like COVID news in China because it just makes logical sense, right? Yeah. They almost did too good of a job making sure no one got regular COVID. So now when they reopen and Omicron's spreading around, everyone's gonna get Omicron. It'll take a week. And then they'll open the factory back up.
All right.
So I don't think it's a.
I agree with you. I agree.
Okay. Good.
All right. Let's bring on our next guest here, Steven Saul from Rivalry. This is a company that operates at the nexus of esports and gaming, 2 emerging industries that creates extra interesting questions. So let's get Steven on the show. Let's give him the special intro, AB. Where's my special intro at? Here it is. Steven, welcome to the show. Oh, wait, no, you're on mute, though. Can you click that mute button there on the screen?
It's a great intro.
Thank you. How are we doing today?
I'm good. How are you guys?
Doing fantastic. So did I do Rivalry justice in my tease? And if not, please correct me.
Yeah, no, I think that's pretty good. We're an we're global esports, so competitive gaming focused sports book. We offer traditional sports. We've like built our own kind of gaming, call it casino product. We do a bunch of media content, all that kind of stuff. So yeah, I mean, kind of sports betting and media entertainment company, but definitely focus more on esports and gaming and all that kind of stuff.
I think our boss, Jason, our CEO, would appreciate the fact that you have managed to secure the domain rivalry.com.
We had to buy it off somebody, actually. We started off as like rivalry.gg, and then we're like, you know what, it's worth it to buy the .com, but we maybe did it the wrong way around. Like we had some kind of prominence and growth, and we're like, yeah, screw it, let's try to get the .com. But at that point, it was known who we were. So when we went to the guy who had the .com, we were not negotiating from like, a position of strength, I guess you could say. But we got it in the end. Yeah.
You were too big, and he knew you, and you thought, okay.
It was just we probably should have gone when it was like a nothing startup, and yeah.
Anyway, all right. So tell us what exactly is going on right now in this space. When I say this space, I mean the esports gaming space. Because as I said, it's you're at the nexus of 2 emerging industries with different headwinds and tailwinds.
Yep.
And so just give us the 10,000 foot view right now.
Yeah, so I mean, we see esports as kind of like the sport of the internet. You've got it, and from a popularity perspective, for people under the age of 30, it's in most cases more popular than traditional sports, or like let's say like physical sports in most of the markets. So people under the age of 30 is like 40% of global population now. Many of them are coming into spending power and starting to get into all these consumer experiences. Like even if you look at kind of what Robinhood, or in Canada, we have Wealthsimple, has done for like the investing experience for like Gen Z or a younger generation of investor. That's kind of what esports is doing in the betting landscape from a betting experience globally. So for us, like we just see it as this like inevitable generational tidal wave that's coming in, just given like the sheer volume of the demographic, the interest in gaming or competitive gaming in esports. So it's like an interesting time, but it's definitely still, a little early. Like, they're still kind of coming up into this, and there's still a huge focus from like a public markets perspective. There's still a huge focus on, traditional sports betting, casino, stuff like that.
Yeah.
Oh, sorry. Go ahead.
No. What I was gonna say is like you can't argue with the popularity of esports, nor can you argue with the popularity of sports betting.
Yep.
But I've never bet on esports in my life, so I don't know.
Well, my question for Steven was going to be, what do you see anything as like a potential catalyst to get esports kind of to that next level? Because like Spencer, I mean, I sports bet. I have a bunch of friends that sports bet, but haven't ventured into esports. And I game myself, and I have a lot of friends who game, and esports has grown tremendously among gamers, of course. But like I foresee eventually like Rocket League being on ESPN. I just don't know. Is it just time that it takes us to get there, or is there like one thing that you would see being a huge move forward to bringing esports more to the mainstream?
It always feels weird to say, but COVID was actually probably like one of the best boosts for esports and esports betting, to be totally honest with you. If you go back to like March, April of 2020, the viewership of esports and the interest in sports betting on esports like skyrocketed. So I mean, even for us, like we saw about 6 months of growth in 30 days at the outset of COVID, because you had traditional sports shut down and people were just looking to still bet on something, and esports being wholly online was still able to kind of maintain its competitive integrity, and people could play at the absolute highest level online from home. So that was still happening. So that was really like the only thing that was on, Twitch. Even it was actually on TV as well, and still is on TV in some cases. So that was probably like the biggest catalyst that I'd say it's had in years. And then now it's really just time, but it's compounding and it's snowballing. So like, we don't think you have to wait like 5 years, but it is still just going to take time for the demographic to mature.
What are the biggest differences operationally in operating a esports betting platform versus just a conventional sports betting platform?
Yeah. So for us, we think you have to inject way more of like an entertainment experience, or something. Betting is more of like the wrapper around the entertainment experience, rather than we find in traditional sports betting, it's more transactional. So the sports bettor knows what they're looking for. They're about a decade older. They'll grind you out on really low odds. They're obviously trying to win. I mean, everyone's trying to win, but I'd say it's more of a hyper transactional experience, which is why I think it's difficult for the mature sportsbooks even to retain that customer. They're kind of there just for like the promotion. They're trying to grind you out a little bit. It's different. Whereas for esports, and maybe it's kind of what's happened to investing also for a younger demographic, for better or for worse, it's just more of like an entertainment experience, and the transaction volume is lower though. So not just because they're younger, we find that they're doing really high volume of smaller bet sizes rather than putting $500 on the Bucks or something on the weekend. It's just different. So it's way more of like an entertainment experience, which means that everything you have to inject into the platform, the way you build it, user experience, onboarding, even customer support, everything top to bottom has to be kind of designed and like empathetic to that. So that's really been the huge difference, and it changes everything in terms of your approach.
So maybe like in some respects you're saying it's not as much about money. It's not a pure bottom line thing as it is like, does it look good? Do they offer cool features?
Yeah.
Do they offer? Okay.
It's just like building a great consumer product for the internet, to be honest. It's less of a spreadsheety transactional thing. And the other thing I would say is that we compare it to kind of the rise and prominence of like Pokemon cards or trading cards now, which has had a bit of a renaissance. But the reason why it's had a renaissance is not just because people thought Pokemon cards are worth more now than they did a decade ago, and there's a whole new interest in it. It's because Instagram Live and YouTube didn't exist in the way that it did a decade ago, in the sense that you can spend $100,000 opening a pack of Pokemon cards, go viral, or get into a community, and there's like value in the clout and the entertainment experience of opening the cards live or recording yourself doing it, whether or not you get something that's valuable in it. So there's like an entertainment experience injected into like the investment experience of trading cards now, which has changed the value paradigm.
Yeah, I'm really excited to see how this, how esports in general, and then of course we're seeing esports grow, we're seeing gambling grow
side by side.
and then kind of how they will, kind of like merge together eventually. Yes. So where can folks find more about Rivalry?
Yeah, you can follow me on Twitter, which is just my full name, Steven Sauls. And then we also have, IR sites, so rivalrycorp.com. Our main consumer site is rivalry.com, as you guys said. And that's probably the best place to get more information.
I have a few more questions before I let you go. As for, where is your presence? You're in Canada.
Yep.
Right?
Yep.
But where are you globally?
Yeah, so we're based in Toronto. We recently got a license for Ontario, which is the biggest province here. So we'll be launching in Ontario, like in our backyard, in a couple weeks. We got a license in Australia, so we'll be in Australia also like imminently. And then our current license, we're in mostly Latin America and Southeast Asia, I'd say, which frankly are just places where there's more developed interest in esports and also more developed culture around betting on esports. So those are two of the big kind of regions for us.
And then I'm trying but failing to bring up that slide that showed your betting handle.
Yeah,
I'm gonna do it in like the next 15 seconds here. But while I do that, can you just tell us about your handle and how that's grown?
Yeah, so we grew our betting handle last year at about 21 or 22% month over month on average. And we've continued at a pretty good clip into this year, I can say, without, to the extent that we haven't publicly reported it. So I think our exit rate last year was just over 100 million US in handle, something like that. And people can, do the math on what another couple months of that kind of looks like into this year, which we've kind of continued at a pretty breakneck pace, I'd say, into this year. So, yeah.
Does the traditional sports betting platforms getting into esports, does that concern you at all?
Not really. It's kind of like the your parents' bank trying to be cool and interest you in investing on their platform. It's like Robinhood versus Charles Schwab. It's just not the same. It's very difficult to execute and do. I think it's possible. Like they have resource, but it's just to rebuild your entire user experience top to bottom, and like everything we do is like so empathetic to somebody that's like 10 to 15 years younger and looking to bet on very different things. I think it's just a really tall order. And then even from a brand perspective, like the monthly measured engagement into Rivalry exceeds the aggregate of all of our peers. We're one of the most engaged betting brands in general because we have like that approach online. And I think even just making your brand relevant to like the young people is just hard. It's just really hard to do, I think. And this is the story of like all kind of tech disruption against the incumbent generationally, right?
Yeah. So how does this work? Do you have to like license specific games? Like, you see a lot of exclusive partnerships on the sports side of the betting market where, the official sports betting platform of the NFL, whatever. Do you have to go to like a Rocket League or Dota or whatever and be like, let's partner up, or how does that work?
It's the exact same as traditional sports. So you have like the major odds providers who are, let's say Sports Radar and Bet Genius is kind of like a duopoly. And then they own most of the data rights from the publishers. So Riot Games, which publishes League of Legends, which is the biggest esport, they sell data rights to odds providers to produce odds on League of Legends. And then that gets distributed as just data feeds to kind of everyone. And then we pick up data feeds like that. And that's how we offer the product.
Okay, but there's no like exclusivity, right, for you for a specific.
Not for us, and not for anybody. And I'd say it's more like exclusive data feed rights people have. So again, Sports Radar, and this isn't traditional sports, where like the odds feed providers will bid to be the exclusive data rights holder, but they just sell the data rights to everybody.
Interesting.
Yeah.
Interesting. Okay. All right. I'm super interested in following the space because, as I said, I've never bet on a video game before in my life, but I'm interested. And we've seen the public markets in the US here in the last year or so grapple with the realities of the sports betting business, which is that it all comes down to customer acquisition cost, and it's kind of a race. I don't want to say it's a race to the bottom, but it's a race
to the top. It's like the inverse. It's like you're paying more and more for customers in sports betting.
Okay, right, exactly, exactly. I was thinking like a race to the bottom in terms of like number of promotions, but you're right. It's a race it's a race to the top. Who can give away the most money, basically? and are you seeing that same type of thing in your business?
We don't. So we were a startup that came into the space, so we were never going to win on balance sheet, and we didn't want to do like two capital cannons like shooting at each other. Okay. So if you've ever seen like the meme of like the two kind of Doge-looking dogs like hitting each other with bats, and then there's the other one off to the side, kind of watching them and like just letting them do their thing off to the side. That's kind of like our thing. is we acquire customers really cheap on the basis of like brand equity, content media, and like our own properties, because we could not rely on promotions because we just did not have the money. So our cost of customer acquisition is like extraordinarily low. It has not increased over time. It's only decreased. And that's like a massive part of our thesis, is like try to have like the best possible brand equity, content, and creative that organically acquires. Because if you're going to rely on promotion, you're also, not only is it going to cost you a hell of a lot to acquire someone to break even on that customer, which is what a lot of the public operators are grappling with right now. You also, the customer's not sticky. Like they're super transient. They have no loyalty to you.
Heck yeah, man. I've
Like,
got like 4 different apps. I don't even know which ones
no
I have
loyalty
anymore.
There's no loyalty, right? So like our long thesis, which is why we emphasize so much on like creative content, our brand equity, we're like obsessed with it. Like a third of the company almost is like creatives, because we're trying to build like an incredible consumer brand. And when the equity gets so strong, then we don't rely on our balance sheet to acquire, and then it compounds, and we build loyalty. And that's how we've been able to be like really profitable in our unit economics. We acquire customers really cheap.
Nice.
So
Nice.
that's been our thesis. Yeah.
Nice. Steven Saul is the co-founder and CEO of Rivalry, rivalry.com to learn more. Steven, this was great. I'd love to have you back on again down the line as things progress here.
Appreciate it.
Have a good one. Thanks for coming on today. All right, that was great. That was a great conversation with Steven. Switching gears, we don't normally talk about esports on this show, or sports betting on this show. Well, a little bit of sports betting, but never both at the same time. So that was cool. Thanks to Steven Saul for coming on today. We're gonna bring on Jake Wujastyk from TrendSpider, but before we do, there was two things in the chat I wanted to address. Number one, Scott Jeffries is coming over to us from Yahoo Finance. So welcome, Scott, in the chat. If you have any suggestions for us on how we can make this show better or worse, we take all feedback seriously. So let us know. And someone else in the chat, and I forget who it was.
Oh, I gotta address 30 too, because he's been asking me since this morning about the players, and I told him.
Okay, so fine, but someone had Baba puts. I don't remember who it was.
Oh, it was TJ.
TJ had Baba puts. TJ, nice job. First of all, let's bring up that Baba chart right now if we can. On my pro.
Yeah. Well, I'll pull up the comment. He didn't necessarily had puts. He says he has a short going.
Oh, I'm sorry.
Baba. I'm assuming he has long puts too.
I misremembered.
He could be just short selling the stock. Who knows?
Okay. So Alibaba, man, what? I mean, if you're short, there's nothing to do but wait, right? I mean, and maybe move your stops down.
I said if I were him, I would maybe. I don't know what his position was when he opened it, how much he's up, but I mean, if you don't trim a short position when you're down 10, or if you're, when your assets, it's down 10% today. Like,
yeah, okay, so you could trim a little bit.
Yeah, or move. I mean, moving your stop losses works too. But I mean, I don't. If it were me, I would trim some of my position today. But
again, not knowing where he's short from.
Yeah.
For all we know, he's got short last week.
For all we know, he got short today at the lows of 78.
True.
80. He's down on that position.
It is utterly remarkable. The one directionality of this market right now. The way that, as I said before, there's 2 Chinese stocks that that are small caps or above that are up in the last month, and the entire market is down.
Well, I saw this on Twitter.
Yeah.
And again, 30. Don't forget, or don't remind me. I will talk about because you asked me about the players during live trading. I said we don't really have time on this show to talk about it, but ask me again on Benzinga Live.
Yeah, okay.
I'll talk about it, but I will. But I saw this on Twitter. I don't know who this account is, but they seem to do some good work. But Baba 2014. Again, this is coming from @TrendSpider on Twitter.
Never heard of him.
Never heard of him. Baba 2014, 10 billion revenue, 4.2 billion. Stock price $92. 2022, 127 billion income, about 20 billion equity, about 170 billion, price 80. So
yes.
As you can see there, it's more about, and if Tim Quast was here, he would tell us, it's not about the fundamentals, it's about the price someone's willing to pay for it. Obviously, that price has dropped for Baba.
Yes.
There was another headline that Baba was laying off like 20% of its workforce, which is never.
We've done this exercise before, but it's building on that TrendSpider tweet right there. If I had asked you in 2016, if I had said, hey, Baba versus Amazon, Who's going to grow more? Like revenue and earnings. Who's going to grow more? Whatever. Baba is the answer. Baba has grown way more in the last 8 years, 7, 8 years.
But Amazon stock price has grown way
But
more.
look at the stock price performance.
Wow.
Amazon's in purple. Okay. Baba has grown more. Baba has grown at a greater clip. But look at the stock price. It don't matter. I mean, it does matter, but the point, it's not the only thing that matters. That's the point here. Let's get Jake from TrendSpider on the show. Talk about this. Jake, what's up, man?
How's it going?
Oh man. It's going.
It's going
Every day it's going.
down. Yeah, a lot of things going down, continue to go down. And shout out to the TrendSpider marketing team for putting that interesting statistic out there with Baba. Yeah, kind of a.
Is this? Oh, that's SPY. Okay, I was gonna say, is this Baba? But it's way too flat to be Baba.
Yeah, no, I got SPY up right now, and you can see here. I mean, we're just continuing to move down, breaking down through Friday's low. I mean, and if you want to get even more kind of bearish here, potentially about to break down through this trend line right here. So we've been kind of watching this channel. I think I've had this thing up for the last couple weeks, and just trading down through this area. The main thing here that I'd point out is just this kind of capitulation, short-term capitulation candle we had here on February 24th. The volume weighted average price of this starting point was acting as your potential support zone until March 4th, and then we just broke down through it and have not been able to get back above it, shown by this red line. So I don't know. I'm thinking we may even get down to the 300s at this point on the S&P 500. You've got some gaps below. So
Whoa! Wait a second. Give me some good news. Give me some
300? Is that what he said?
300s, not 300. 300. So
Okay.
you do have. So this is actually pretty cool. We are definitely in a market where you want to be looking at gaps, especially to the downside. So one thing you can do is just turn on the gap snake, and it's automatically going to show you these gaps below. So you don't have to go searching for them and trying to find every single one. The system will highlight it for you. So this is the most relevant gap for me below. That is around 411. And that technically did fill back on the 24th. So your next one down here is way down here around 400 on the dot or so. And that's, that would put this kind of right in line with that lower support zone below. So I don't know. Right before I got on, I just read something that China showed interest in helping Russia with their whatever in Ukraine. So that's probably why the market's moving. And this is something that you definitely, if you are actively trading right now, you have to have some type of news source in front of you because that is what's moving the market. It's a news-driven market. It's not like 4 or 5 months ago where the market's up just because it's up. The market's continuing down because news is driving it down, which sometimes the market can be more news driven. I mean, this is definitely one of the most news driven markets I've ever seen. And you do need to have some type of source in front of you. So we do have the Benzinga Pro news source on the sidebar. So if you do want to do that, just go to the sidebar, add a widget. Here's the news feature right here. So you can kind of get the most up-to-date info here. And that's really what you need to be looking at. Technicals always matter, but what's driving those moves to these technical levels also matter, which is news driven right now. So we'll see if this holds. This is definitely a potential area here. This very simple kind of trend zone. Seems like we're kind of holding it right now, but there's a lot of day left. And so if we do break down, there's a lot of open area below to the 400s, which is right in line with that gap. So if you are looking for gaps and you don't want to look for every single one on the chart, definitely try out the gap snake on the platform. Haven't really looked too much at the Qs today, but they're kind of right in line with what I drew over the weekend. You've got this falling wedge here, and I had some people mention, post on this comment on this post. A falling wedge does not necessarily mean it's bullish. Any pattern is just a pattern, right? This is a falling wedge. You've got lower lows, you've got lower highs, kind of compressing here, but a falling wedge can easily break down. So right now we are simply just testing this area, the support zone below, right around 315 to 318. And so if we break down through there, then we start looking to the left. What's the next area to the left? Well, if you just want to look at basic gaps below, turn on the gap snake once again, and your main gap on the Qs is right here around, or we already broke through that, excuse me. So your next level to watch would simply just be this pivot here, which is right around 316 as well. And then, if you just want to use horizontal levels, these would be your next ones to watch. So, 308, 309, if that breaks down, then this area, this zone here around 297 to 299, breaking to new lows is not a bullish thing in the market. So,
I was trying to find my air horn. I couldn't find an air horn sound effect for when you were talking about the Benzinga news feed. But yeah, Benzinga news and TrendSpider, everyone, check it out.
yes.
Or don't, or do.
Or do.
All right, wait, Jake, before we go any further here, before I forget, there was a question in the chat that I was going to ask you about. I wrote it down on Friday. I made a mental note, and then I wrote it down, and then I forgot. How was the Cuban interview? You were in Texas to talk to Mark Cuban. How'd that go?
Cuban? I didn't talk.
Weren't you? Wasn't TrendSpider going to South by Southwest? I thought you were.
No, I was in San Antonio for my brother's Air Force graduation, but
so what? Wasn't someone from TrendSpider going to South by Southwest to talk to Cuban, or did I not? Am I making stuff up? I could have sworn I saw that on Friday.
Maybe making stuff up. No, I wasn't there for that, and I don't.
Oh, Jesus! All right,
sorry. Anybody was, but I was in Texas.
I could have sworn. All right, fine. It must have been someone else in the chat mentioned it. I whatever. Moving on. Apologies.
No worries.
Oh, awkward.
So San Antonio, first time there. That was a nice experience. My brother graduated from basic training in the Air Force. So
nice. Congratulations.
Thank you. Did get a little warm weather, but now it's warming up in Denver. So just chasing the good weather. But yeah, it's really hard to pull up any good looking charts to the
upside.
You've got IWM, perfect rejection at this descending triangle. You've got a lot of descending triangles forming right now. This is definitely a market where if you're a swing trader, maybe you look at swinging puts overnight rather than trying to play a long side of things. But one that looks like a pretty strong short to me right now, and based on the setup, would be CRM, Salesforce, and you've got just your basic kind of bear flag or bear pennant here. And if we break down, then I think we're going to at least retest these lows around the 184.50 area. But with anything, it's an if then, right? If we hold this area, then we're probably going to chop around for a while. However, with the weakness in the market, I could definitely see this one breaking down and retesting these lows. And same thing, you just want to start scrolling left and see, are there any gaps that need to be filled below? But this is not what I would call an incredibly bullish setup here. You've got companies probably considering, pulling back hiring, that type of thing. Sales, oil is just going crazy. And this one would probably get hit just based on that logic, but it's also just a stock in the market that hasn't broken down from this current pattern, which other ones have. Netflix is a good example of that. I think we touched on Netflix a week ago or the week before. That huge descending triangle that we had, we're continuing to break down. COVID lows would be next here in the 280s, 290s. So yeah, I mean, if you are someone who really wants to look for some bullish charts, it's kind of hard to find them unless you're trading these micro caps, which, you know, to each their own. There's nothing wrong with that. The problem is a lot of these micro caps get pushed by, you know, these chat rooms and that type of thing. So never a huge fan of that. But what happens is, if the market's tanking, you don't have a lot of liquidity to, you know, maybe some people just don't want to short outright. Maybe they want to buy puts. Well, even some of these options chains don't have a lot of liquidity on the put side, and these spreads are pretty big. So what do people do? They hold cash, and they're just looking for the next thing that's going to, you know, make a big move. And a lot of those names have been these micro cap stocks right now. So, you know, that's what a lot of people have been playing. But like I said, it's really hard for me to even mention something less than $100 million market cap. I just, you know, I just don't like to even talk about stocks that cheap and that small. So, but people are making good money on the micro caps. Nothing wrong with that. It's just not something that
I agree. It's not my thing either. I do it because that's where the activity is. Sometimes I bring it up, I like to know like what our users are searching for, but it's not my cup of tea either. It's really not. But there are a few things in the chat though that are of my cup of tea here. So we're being asked about Tesla. Can you pull up Tesla, please?
Ooh. Yeah, I think Tesla is probably going to at least test this area below. Some of these candles from February 24th are just crazy. So, you know, the low here would definitely be an area to watch. Same thing if you just want to anchor a VWAP, we're definitely below that volume weighted average price from this capitulation point. And just not, you know, there's not a lot of signs of any type of bullishness here. I mean, you really want to go out to the monthly chart just to get an idea. If we do break below this previous low, I mean, we could be testing these lows from April 2021, and a lot of people would think the world's ending, and this thing's still up huge from pretty much any point in time since then. But you have a lot of people who have profit in Tesla. If people start realizing, oh, wait, the market isn't necessarily moving on fundamentals and what's going to happen in the future anymore, people may start taking their profit and realize some of that profit that they've just been holding on to for the last 3 years or whatever. That creates a big waterfall. You got a lot of supply and a lot of people that are trying to realize those profits, and that can create some pretty big moves. So yeah, Tesla, I mean, on the monthly chart, you definitely would want to hold this low here. Weekly chart, I mean, you've got some gaps below that are pretty crazy. I don't know if we'd ever fill this gap way down here, but you know, if you look at Tesla, this move has really not even gotten started. And you think about like ARK, right? ARKK. That has a lot of exposure to Tesla. What if Kathy starts selling Tesla and starts adding to some of the supply on the market there? It's just, yeah, it's not looking great. I can't.
For those wondering, if you combine all of the ARK ETFs combined, Tesla makes up 7% of the 6 active ARK funds. So, however many billions of dollars are managed by ARK, 7% of that is Tesla. It's by far their largest weighting.
Yeah,
it's a lot. It's a lot of Tesla.
Yeah, I mean, if you look at the VWAP from the COVID drop here, that VWAP's way down here in the 400s. And I think the problem with Tesla is you have some people who are literally just live for Tesla, which is cool. I think I think it's been a great company for people, and people have made a lot of money. But this is not a market that cares about what Tesla is going to do in 5 years. It cares about liquidity. And if people need liquidity, i.e. capital, they're going to get it from stocks that they have profit in.
Yes.
And this is a great example of that.
Yeah, the reality is, with the exception of the past couple of months, right? Every bet on Tesla, and when I say last couple, I really mean going back to November here, because that was the all-time high. But every bet against Tesla has been wrong, right? Except everything since October, because that was the all-time high. So there's your bull case, right? Is the bears have been wrong forever. But everything that Jake said, I agree with wholeheartedly, right? This is a different environment. We are entering, we're about to be in a rising rate environment as of Wednesday. Actually, we're kind of in one now to some extent. And people are concerned about liquidity. They're concerned about inflation. They're concerned about growth. Netflix, the stock, probably pulled forward a lot of their growth. Like a lot of the growth in Tesla that we have, in terms of the actual company and the cars, that's been pulled forward. Like the stock is priced that in already. So I would be concerned here as well. Now I've been wrong about Tesla all the way up too, but and I own Tesla because I've got ARKW, and I've got I own the S&P 500, so I've got Tesla too. But I'd be concerned if I owned the stock by itself. I would be from the long side, and I was sitting on profits. I would think about taking some too.
Yeah, if I were to take a wild guess where this could get a, maybe a little bit of a bounce. So one way you can use the VWAP, the anchored VWAP, is to find an area where price really had, and this is for any anchor point for the VWAP, but what you want to do is you want to find important status quo changing points on a stock, right? Whether that's COVID lows, whether that's an earnings release that changed, the whole dynamic of the stock. Whether it's something like this in 2020 where we initially hit a high around 200 on Tesla. It's crazy to even say. Hit a high of 200. And then we finally broke out through that area, through these two highs in June of 2020. That's where this new really strong uptrend started. So that's where we want to measure the volume weighted average price. And you can see here that it did act as an area of support a couple different times here on the way up. And then we kind of just started to deviate away from it and got pretty far above that area. So if I were to take a wild guess where this goes, I would say probably to this area below, which is in the low 600s. And I don't have a put position on here at this point. I may consider one, but yeah, I mean, this looks ready to get to the 600s. And like I said, it could simply just be, I mean, think about the average portfolio. It's probably not doing well unless you just were loaded up on oil or, whatever. People are looking for areas where they can get some liquidity that they're not taking these huge losses. And Tesla is that stock that has liquidity that if you bought it at 450, 500, you still have some profit. You definitely want to take that profit before that profit gets evaporated as well. So that's kind of the bear thesis there for me on Tesla. Not that I don't like the company, not that I don't like Elon Musk. It has nothing to do with that. It has to do with liquidity.
A lot of people probably saw their huge gains in a lot of COVID stocks and COVID ETFs evaporate. And if they didn't sell, those gains are probably gone in stocks like Zoom and Teladoc and Roku and ARK. And that's a hard lesson to learn.
95. Ouch.
It's crazy, right? It's crazy. I mean, but it's also not crazy.
Yeah.
Because it makes sense.
Here's ARK. I mean, if you look at the longer term chart on ARK,
I know. It's
still technically in an uptrend if you're looking back since 2016. Maybe this thing gets to 50 and bounces, but I don't want to say, anything bad about Cathie Wood. She's a lot smarter than I am, but I don't know if she made the right choice with some of these names that she's got in there. So we'll see what happens. Still in an uptrend for now. If you do look back far enough, that's a very long look back to find this uptrend. But technically, you're still in this green zone. Simply a green zone, not because it's a buy zone. It's simply just because it has acted as a bounce spot in the past. So we'll see. Any other tickers that people want to?
I would love your thoughts on Moderna here. I mean, I guess I didn't realize that the market was this dumb sometimes. It had a huge pop off the open. I guess in hindsight, it was predictable, but because China locked down one of their provinces, over 3,000 COVID cases.
Yeah.
I thought we were past the trading off of COVID headlines and vaccine headlines. I thought we were past that. I guess I'm wrong, but what do you do here with the stock? And I have not looked at Moderna in the last 2 hours, so I don't actually know what's happened. But oh, it's come off. Okay, interesting.
What was it up? Wow, what was it, like 20% or something?
Yeah. Well, how high did we get? We got to
166.
166.
Yeah. I don't know. That's just the market you're in. This is a great example of a lot of people are just looking for liquidity, and this probably was a very liquid stock when it was popping. So people were just wanting to play it, and that probably just created this kind of self-fulfilling prophecy. Oh, there's actually a green stock in the market. I'm going to go play this. And then that's how you kind of get these big moves. So you have a lot of money and capital funneling right now into these individual names that do have these kind of isolated moves. And so it's not incredibly shocking to see Moderna do that, especially probably because a lot of people just are constantly shorting this thing. So there's maybe a little bit of a short squeeze in there too. But for now, you just popped up right to this resistance zone. Pretty textbook. And if we just throw some VWAPs on there, let's do it from this one too. Your main levels to watch would be right around where we got rejected from. If this did break out, then maybe you get to 187, 188. And then from there, you got like 222 from your high up here in November, which is your VWAP around 222. So yeah, until this thing breaks this just downward sloping trend line or trend zone, just kind of chopping around.
All right. Someone asked for Palantir. Man, maybe this is a sign. Tom Nash asked for Palantir. Man, there was a time where I would get asked about this stock every single day.
Yeah.
And I don't get asked about Palantir every day anymore. Maybe now it's like once or twice a week, which is a sign of that people have given up or sold, or I don't know. But
yeah. I mean, if you kind of want to look at leaders versus laggards, look at PLTR. Remember, we looked at CRM and we had this same exact setup here, except now PLTR is kind of leading the way. So if I were to take a wild guess what CRM is going to look like in the next couple of days, I'd take a guess that it's going to look like this. So yeah, just breaking down through this bearish pennant here, I would assume we at least retest the lows. I wouldn't be shocked at all to see this go back to your IPO levels in the low 9s.
Brutal.
Maybe even
low.
Right.
Thoughts on? Yeah, I know. Thoughts on Square or Block, whatever you want to call it.
Square, same thing. And that's the thing. This market has these setups are the same across the board, right? You've just got basic patterns playing out, except they're to the downside instead of to the upside, like we've seen the last couple of years. So draw a rough bearish pennant right here, and you pretty much have a breakdown. And that's why I'm thinking CRM may be the move, because it hasn't broken down yet. So you sometimes want to look for the leaders versus the laggards. This is lagging. CRM may be the next one to go. So SQ, you've already got your breakdown, and then you go to CRM and see, oh, well, this hasn't broken down yet. This may be lagging. So that's maybe the way to look at some things right now too. But yeah, SQ breaking down. Wouldn't be shocked to see a retest of that February 24th low, which is right around 82.50 or so. 82.50 to 83. We're not going to go into exact pennies here, but yeah, pretty classic breakdown. And the same thing, right? If you scroll back, look, this thing looks like it's. I mean, if you look from here, it's like, oh my gosh, this thing's crashed. But then you zoom out, and you're like, oh, this still has a lot of room to move down if it really wanted to. If I were to draw a basic support zone here and just kind of grab some of that, we could easily be in for 60s or 70s on this one.
Gosh. All right, let's do one or two more here. Alibaba, Jake. I don't know if we looked at that one yet. I mean, we've looked at it on the show, but I don't think you have today. I think it's at a 6-year low.
Maybe going for all-time lows, to be honest. Yeah, I mean, same thing, right? You had this descending triangle. It's very similar to Netflix. You just had this breakdown, and
that's the story of the show today. Everything I asked Jake, every ticker up, same thing. Yeah. All these charts look the same, man.
Yeah, and it's because it's such a market-driven move in names, right? You've got before you had stocks kind of trading a little bifurcated, meaning some stocks were going one way, other stocks were going the other way. Now you literally got the whole market pretty much moving in tandem, which is a pretty big sign of a move to the downside. I mean, look at ExxonMobil. ExxonMobil was leading for quite a while, and this was down. I don't know what it's down now, about 3%. It was down almost like 4 or 5% earlier today. So this is definitely something that is more in an uptrend. If you do want to look at more of the uptrending stocks, the question just is how long can demand stay this high with the prices they are. Now, obviously, the market is supply and demand, but until we really pump out some more supply and demand remains somewhat constant, or supply decreasing while demand is remaining constant, you're going to see the price continue to move up. But I do think oil prices are at a point where, I mean, go look at airline tickets. I was looking at an airline ticket to Vegas for the Finchwick conference in May.
Oh my gosh.
It's gone up like $200, which is like over 50% from what it was like 2 weeks ago.
I know.
So I can only imagine people are going to, there's going to be a little inelastic demand there, or there usually is, but you may have some elastic demand, meaning people are sensitive to price changes. Generally people think of oil as something that's inelastic, meaning the price changes and you don't really have that big of a change in demand. But when you've got spikes like this in oil, you are going to see people start maybe not taking that vacation because all of a sudden to fly their family to wherever is $3,000 now instead of $1,000.
I've been tracking the flights to Omaha for the Berkshire meeting because I kind of want to go, and when I started tracking about a month ago, they were expensive. They were like $500. It was like $550, I think, to go from Detroit to Omaha. I'm like, all right, well, it'll probably like go down at some point. Nope, we're up to $680 right now. It's going the other direction. So it's crazy. It's crazy right now. But yeah, guys, Jake Wujastyk, co-founder of TrendSpider, get 25% off your TrendSpider sub with the code BZ25 that's on the screen right there. Check it out, TrendSpider.com. Jake, always a pleasure. Talk to you again next week, sir. Have a good one.
See you guys.
All right, we have come to our final segment of the day. Every Monday at 1:30, we are joined by Chris Capre, who runs the Benzinga Options Trading School. And I'm going to before I forget, I'm going to put the link in the chat and on the screen to join the Benzinga Options Trading School. The link is in the description. I'm going to put this link in the chat again so you all know what the heck we're talking about. And while I do that, can you bring Chris on the show, AB?
Of course. Let's give
right,
Chris our new special intro.
Newish.
This Chris Capre.
Dig it.
Welcome.
I dig it. I feel like I'm watching one of those movies about like the marching bands, like jamming out some of those awesome tunes that they do. Like that's what the music sounds like in the background.
I love it. I'd say that we'll take that to the highest compliment. Did you have a good weekend, Chris?
Did. I had a great way to end the trading week, and then went to go see the Batman movie, which was awesome. So
I've heard
great way
good
to end
things.
last week.
I've
What's
heard
that?
good things.
I might go see it tonight.
I've heard good things
I
about
might go
it.
see it tonight.
Oh,
Yeah.
you should. It's definitely a different take from, kind of the Nolan type. Obviously, there are going to be some cross similarities, but he's definitely got more of like a raw, detective type feel to it. They really get into the detective work and, some of the kind of more old school DC comic type approach to it. So it's a great movie. It's really well done. It is. I was very impressed with it.
All right. Well, no more. I think I might go see it tonight. So hopefully I'll be able to talk more about it tomorrow, but I won't give any spoilers or anything. I'm with you, 30 there. I also I don't like to I usually don't like to know like anything about a movie before I go see it. I like to go in cold kind of.
Yeah. I mean, that's part of the experience of it, is that you get this new experience of things you didn't expect, and that's part of the enjoyment of movies.
All right. Well, Chris, you want to go ahead and pull up your charts, and we'll take a look at what's going on in the markets today.
Yes. All right. You should be seeing my chart on SPYs.
Yep.
All right. So I'm going to pull up my fancy little pen tool. Okay, so what's going on in the options market? As head of the Benzinga Options School, my job is to come on the show and talk about what's going on in the options market. And right now we're in a deeply negative gamma environment. So negative gamma is when the market is net short options. And so like if you have a bull call spread, you buy a call for say 50 delta and you short a call for 25 delta. Even though you have one long call and one short call, you're actually still net long options. You're net long 25 deltas. So if we take a step back and SPYs, and we say, okay, what is the collective delta of all the positions on SPYs, all options, all strikes, and we summate and collate the collective gamma of all those positions, well, it's either in a positive notional environment or negative. And when it's negative, that means that the market is going to experience more volatility. And that's just where we are right now. We forecasted in our morning market commentary with the Benzinga Options School members, between 1.25 up to 2% moves on the day. And that's kind of what we're manifesting right now. So when the market's in negative gamma, the option dealers' delta hedging activities actually trades with the market. So if the market sells off, the dealers are selling. If the market buys up, it's buying. That's why you can see moves like Moderna where they can rip up, or you can see stocks that rip down. Because of that negative gamma environment, it exacerbates volatility. And volatility isn't just in equities right now. There's really strong volatility in the bond market. There's really strong volatility in commodities, which we've seen tapered off a little bit, but still strong volatility in the FX. So we got volatility in multiple asset classes right now, which basically means that, hey, when the market does move up, it's going to rip pretty strongly. And when it sells off, it's going to sell aggressively. Now, basically, the market is short the SPYs right now. Literally 2 out of every 3 options is a long put. And that creates, a highly negative gamma environment. So if you think about it like this, if this is just the basic aspects of market gamma and option positioning. So if the trader is long puts, the dealer is short puts, that means that the dealer, to delta hedge this position, is going to have to short shares. Because if they're short puts and the stock goes down, then those puts start losing value. They start losing money. So how do they hedge that to avoid that? They short shares. That exacerbates the downside. Shorting shares pulls liquidity out of the markets. And we've been in this environment, I think, every trading day this year except for 4 days. 4 days we're in positive gamma. Every other trading day we've been in negative gamma for this year. So our levels, what we're seeing today is that there's a lot of options that rolled off on Friday, which kind of reset the options board a little bit for today. So traders are reestablishing positions. And as they reestablish positions, dealers have to reestablish new hedges. Well, with that being said, traders are going to want to hold protection through the FOMC on the 16th, which means that traders are holding long puts either through the 16th or the 18th, past that. Right now, about 25% of the notional deltas in SPYs is expiring on the 18th. So that means, 1 out of every 4 options in SPYs across all strikes, across all expiries, is expiring on the 18th. That's a lot. So traders want to hold protection through the FOMC. They're basically saying at this point, look, we feel pretty well hedged in terms of what's going on with the Russia-Ukraine situation. Like, we've digested that based on the current situation of that. But we have a lot of unclarity around rates. If they didn't care about rates, they wouldn't be setting most of their options to expire on the 18th, just after the FOMC on the 16th. So traders are deeply concerned about this FOMC on the 16th. Because the market is so heavy on the long put side, if the Fed decides to play ball and comes out with a very benign, not hawkish at all, rate, minutes kind of coming out and saying, yeah, we're probably not going to taper as much. Like, if it comes out pretty benign, they don't spook the markets. Well, a lot of those long puts are going to be closed or monetized because the market could rally them. And if the market is 2 out of every 3 options is long puts, well, then traders are going to unwind more long puts than they are going to unwind other options. So if the traders unwind the long puts, dealers unwind the short puts, and they unwind the short share hedges. That could create a rally in SPYs. So the positioning is primed. That doesn't mean it's going to, but it's primed that if it comes out a very benign Fed, the positioning would flip, and that would create a strong rally. We estimate about 20 points in SPYs, so $20 in SPYs. We talked about this in our Benzinga Option School weekly newsletter on Sunday. So we our approach to this is we want to have protection through the 18th, but if the Fed does come out benign in a very benign way, then we think SPYs is going to have at least a 2, 3, maybe 1 week rally, because a lot of these long puts are going to get unwound. Keep in mind, the last time we had positioning like this to this extreme on the long put side, do you know when the last time one was, AB?
Last time we had this strong on the put side, I'm going to guess 08.
No. Close though. It's a good guess though. The COVID bottom. So there's no coincidence. It's not a coincidence. If you look at this week right here, when the COVID selling started, this was the February OPEX, meaning it was the monthly option expiry for February. That is a horrible handwriting there. So just call it Feb OPEX. There we go. Much better. This week was the week after the March OPEX. And that matters because and the monthly expires is when the largest amount of positioning is usually unwound, is expiring. So the sell-off started on the February OPEX and it ended after the March OPEX. That is not a coincidence by any means. There was a massive amount of negative delta trades, long puts in SPYs concentrated. Like BlackRock had a multi-billion-dollar put position, covering this here. So when all those puts got unwound, it created the catalyst to start a pretty big rally. We don't necessarily think that the conditions are the same for the same type of rally, like all of a sudden a 2-year bull run, but we do feel that there is enough fuel in the markets that, should we start to get towards kind of these extreme levels where there's a lot of open interest on the option side, if the Fed does come up benign and they play ball and they placate the markets, we could get a pretty strong rally in SPYs. So the bulk of the option positioning right now, there's a decent chunk. I'm drawing bars to represent kind of like open interest, kind of like market profile does. There's a strong chunk at 415, really good chunk at 411, 410, not much in between, and then not much until we get to like 400. There's a huge chunk of open interest there, which suggests that traders have protection on the wings. They have tail risk protection in case we get a massive sell-off. They're covering the tails, the far end of the strike, the spectrum of strikes. So most likely this means that the dealers are pretty well hedged. Most likely dealers own tail risk protection. Most likely a lot of long only funds own tail risk protection. And so if it does come out very favorable, this FOMC, a lot of that position is going to get unwound. Therefore, the hedging activity becomes very favorable. If, however, they come out and it's not good at all, it's like hawkish, worried about inflation, still going to taper the same amount, more than 3 rate increases, going to get more aggressive. If we lose 410 and we lose 400, the positioning is much more anemic below 400. That means that if it was to break that and close below that, traders would have to restart new positions for downside protection because they're not protected below 400. In other words, they aren't anticipating a break below 400. So if we get that, then they will have to start initiating more short share hedges or more downside protection, which would be long put type options. That would force the dealers to now short more shares. That would further exacerbate the downside. To me, that's the only catalyst that could really help VIX continue its uptrend. VIX is very, very elevated. It hasn't been this elevated and consistently above 30 for quite a long time. So you're going to need a new catalyst. IV's rich with the high VIX. Puts are expensive. They need new fuel. Otherwise, they start bleeding deltas and they start bleeding theta decay. So we have to look at this in a way that says, okay, what would actually cause a spike in IV and VIX? You have to have a new catalyst. That could either be a geopolitical escalation or the Fed comes out and it's very hawkish come the 16th. If that happens, then we're kind of in a little bit of trouble. Like we get a week of close below 400, and if traders start initiating new positions, we're in a totally different regime. We're in a bear market pretty much at that point. And so that will at least force hedging activities most likely out till the April expiry. So, there'll still be more clarity on rates, still be more clarity on the geopolitical situation. They'll just say, now let's not hedge for a week. Let's hedge until the monthly OPEX in April, which is on a Thursday because the Good Friday is a holiday.
I mean, what do you say? What do you say to someone who, is looking to get in now on a short to like hedge? Like, is it too late, or would it still be smart to do if you're looking for, again, just a hedge? If you're already exposed overexposed to the long side, maybe you just want to get a hedge, or would you say to wait a little bit?
You want to wait for a rally if you can get one, if you can time it, because if you buy when the market's selling off, remember, puts get more expensive. Puts increase in value as the market goes down. That's the market going down. So if the market's going down and you buy a put, it's more expensive than if you were to buy it the market going sideways or up. So that's why if you can, you want to time the rallies on that. We wrote for our Benzinga Option School members, we told them days in advance, this 430 to 432, there's too much open interest and too much hedging activities for it to break it this week. And so I don't think it's a coincidence. We even said it on the Twitter spaces that we did with Benzinga on Tuesday, Thursday. We said this 432 is not going to break. It will take a really strong amount to break it. It wasn't share volume that was the issue. There's plenty of share volume on these days. It wasn't share volume. It was the hedging impacts that just made it too hard to get past it. So you need to wait for these little rallies. Otherwise, you're overpaying for the insurance. It's kind of like you don't want to buy fire insurance on your home after there's been a major fire because it's going to be more expensive. You want to do it before. So you got to wait for these little pops to happen. I think today is probably the last day we see some serious downside volatility. If there's no new catalyst out of the geopolitical situation, I think today is the most volatile day of the week until Wednesday. I think traders start trimming positions on Tuesday and Wednesday because they're going to not want to commit to holding positions overnight going into the FOMC. So I think volatility compresses the next 2 days unless things deteriorate in Ukraine. So if that happens, then there's a decent chance that the selling abates, we get a little bit of a pop, and you start buying downside protection. If you are going to buy protection, I would get it down till 400. Only until we get a weekly close below that would I suggest getting protection below that.
I am seeing that the VIX has shot up in the last hour, so I don't know if we got any specific headlines. I mean, it makes sense why the VIX is trading higher today, right? You got the new, you got COVID spreading in China, you got the war going on, you got oil prices. Actually, oil prices have been moving down, but nonetheless, I know a lot of people have been reaching out to us saying they're looking at getting into short positions now or looking to hedge now, and I just don't know. I mean, of course, no one has a crystal ball. I don't know where the markets are going, but I'm personally not looking to get into shorts of some of these individual names that are already drawn down 20, 30% in a month.
Yeah, I think it's very unlikely before the FOMC we close below this kind of 410 area. The positioning is quite thick, and it would take a lot for us to get past this. If by some chance we do, we're definitely not breaking 400 before the FOMC. So I think after today, you're going to see trading activity reduce. That will reduce hedging activity. That will reduce flow activity. That will reduce kind of these liquidation things that you're seeing in the markets. A lot of the weakness we're seeing right now, is a fair amount of single tickers. Share volume is not elevated by any means. It's barely half of the 10-day average. So the chances of us hitting the 10-day average seem extreme, unlikely. So it's not share volume that's necessarily driving it today. I think there's traders picking up some new hedges. I wouldn't be surprised at the end of the day if we look at the open interest totals that we're going to see volumes on puts are probably pretty strong, probably at lower strikes than what the open was. That will pull the market lower. So, but I think you're going to have a hard time breaking it. I think if we don't break it today, if we don't break 410 today, then probably volatility compresses going into Tuesday, Wednesday, and therefore we get a little bit of a relief. But yeah, I wouldn't want to necessarily be re-shorting anything right now at all. We had shorts in our Benzinga Option School newsletter that we post on Sundays now. What did we say? What were our calls last week and this week? We said MongoDB is going to run into resistance and it's going to sell off. We shorted that, made money on that. We said Crowd is going to fade towards 180 early this week. It did it today already. We also shorted AMD last week. So all these things have faded because they just ran into, they were good short selling opportunities. In terms of right now, I think, some of the single tickers are kind of weak, particularly tech. Why tech? Well, if you think about the September, October rallies in the markets, tech was some of the craziest stuff. Tesla, AMD, NVIDIA, gaining 50, 60% in 4 to 6 weeks. Not normal. We talked about this. Tesla has now unwound all of those gains. AMD, same thing. Completely unwound the September, October rally. NVIDIA completely unwound the September, October rally. So we've unwound all of that extra ebullience, and now things are just kind of getting back to a little bit more normalized. Tesla, though, still seems a little vulnerable. Like when I look at the option positioning on Tesla, let's take a look at this. So Tesla is actually down 10% on total volume going to today. Last week, it ended up with roughly 2.2 million calls and 2.2 million puts. It opened this week with roughly only 2 million calls and 2 million puts. So it came down a little bit. And about 30% of these options, 30% of the 4 million options out there is expiring this Friday. So traders have a lot of positions that are expiring after the FOMC. When I look at the overall positioning, though, Tesla to me seems like some of the hedging impacts around 750, which is around this line right here. You can see this right here. So this horizontal line right there, some of the hedging impacts are a little bit strong to where dealers might actually start buying as we get into the 750. But once we lose 710, 700, then the hedging impacts, dealers actually go back to selling, which means that we probably make it down to like 700 before, again, we start to see more open interest take in. So it's kind of got these gaps like every $50, 800, 750, 700. And in between that, the positioning is kind of thin. And so traders aren't willing to really defend in between those $50 levels. So those are the levels you should be trading in SPYs right now, or in Tesla right now.
Got it. Let's see if we've got anything from the chat, or if there's any other tickers that you already had, excuse me, queued up. Then we can get to that real quick. But we do only have a couple more minutes.
Ford.
I'm trying to see if we had like market-wide news headline, because the SPY looks like we've dumped.
No. No, I didn't see any headlines in the Benzinga Pro either. So to me, most of the conversation in chat seems to be political right now, which is interesting. Born to be Free says, Chris, going to take your class just doing the stock one with Mark first. Copy that. Look forward to having you on board.
Okay. Now, oh wow, now the SPY's really coming in on the last 5-minute candle. We had a big leg down. Now we're coming back up. All right. Yeah. Ford. Sorry.
Yeah, let's take a look at Ford real quick. So option positioning on Ford is interesting. there's actually a lot of options on Ford that are expiring this Friday. Huge. 50% of 3.6 million calls. This is not including today's flows. This is just up till today. Prior to today, we had 3.6 million calls and 2.7 million puts. So it's call heavy. So as we get closer and closer to expiry, those calls are under more and more pressure to monetize. So Ford's going to be under pressure this week. Now, if we were to get a positive, constructive Fed FOMC, where does Ford start to become an interesting buy? The hedging impacts on Ford suggests basically around this kind of 14 to 1261 area. So right around here is where the hedging impacts on Ford start to get really interesting, meaning that dealers will actually start kind of either no longer be selling in this zone, or they'll actually start buying shares. So either do less selling of the shares, they'll do less of that, or they'll actually start buying shares. So this is if we get a benign Fed. If we get a really hawkish Fed, then you'd want to let it kind of play itself out and then wait for transitions before buying. But based on current positions, if there was no FOMC, I would be looking to buy in this zone here. I would be looking to buy. That would be a full unwind of, again, the September-October rally that happened last year. So, that this Ford is the only one. Tesla hasn't held up from the September-October rip.
And when is that? Is that this Wednesday and Thursday, the FOMC?
This Wednesday, 2 o'clock Eastern.
This Wednesday.
Yeah, that's the release. And then 30 minutes later is the live meeting with Jay Powell, otherwise known as the human Xanax.
Love it. All right. Well, Chris Capre, head of the Benzinga Options School, like Spencer said, the link is in the description. You all should go check it out if you have not already. We have Chris on with us every Monday at 1:30 p.m. ET. Chris, last thoughts. What would you be looking for from a technical perspective just on that? Okay, this downtrend, this correction, whatever you call it, is reversing.
Okay, so if the market does reverse post FOMC, I would want to get long, but I wouldn't want to get long shares because the volatility would be too much. So it's much harder to control risk. And I wouldn't want to buy just straight outright calls because IV is really high. So those calls are overpriced. So how do you neutralize some of the high IV and how do you neutralize theta? Because you may have to hold it for 2, 3, 5 days a week to see some decent gains in SPY. Our recommendation to our Benzinga Option School members is if we get into this zone by the FOMC, either get long a bull call spread. So you buy a call in this zone and then sell a call further up. We think there's potential that if the market does rally from the FOMC, we think there's potential for a $20 move in SPYs, which is quite significant if you think about it.
Wait, that's a big move.
Yeah. Well, the positioning's wound pretty tight to the downside. So it's kind of like a spring, in those cars, you roll them back. The more you roll the spring, the more it front loads that energy forward. So we either like that, or if you want to neutralize some of the volatility, but yet take advantage of some of the high IV, then you can do a broken wing butterfly to the call side. So that'd be long calls around here, short 2 times the amount of calls up here, and then long calls just above it. So if you're doing like 10 here, that'd be 20, 10. So if the market does shoot past this, well, these will offset the short calls here. These will offset the short calls, so they're completely neutralized. And yet we get to sell these for a good premium because they're expensive. So those are the 2 ways that we like taking advantage of a potential bull play to the upside if the FOMC, if the Fed plays ball. We think those are probably the 2 ways to do it. They're fixed risk. You have pretty low risk right off the bat. You have a lot of profit potential if you nail the direction. And we would set these expiries either for the 18th or the following Wednesday.
Cool. All right. I was just curious because I've been watching, trying to look for like any clue of when we might see some sort of reversal. So I guess it makes most sense. FOMC would be our soonest catalyst coming up for that potential reversal. Chris, always great to have you on. Looking forward to, rest of this week. The markets have just been great for trading. Oh, great for quick trades, not for investing as much.
They've been great for us option traders. Remember the Benzinga Option School. We've been shorting a lot of this, making money. You just have to be nimble in these markets. But, you know, either way, we're going to get a resolution this week. Either it's going to be, hey, we're entering a deeper bear market, or okay, it's not as bad as we thought, and you're going to see the market rally. Like FOMC and the 18th is going to provide resolution. So the traders will feel like they have more clarity by the end of this week as to what the next direction for the next month is.
I love it. All right, Chris. Well, we will see you next Monday. Until then, take care.
Sounds good. Be well.
You as well. All right, y'all. That was Chris Capre. Again, links are in the description. Go check out Benzinga Options School if you have not already.
Do it. Just do it.
Let me check real quick if
all right, while you check that,
if 30 is still in here.
If what?
Oh,
okay. While you do that, can I do a crypto update?
Oh, I don't think he is. Damn. All right. Sorry, 30. I'll get you tomorrow. Yeah.
Right.
That's it.
Cue Debbie Downer sound effect. Wah, wah. We need to get that on our stream deck. It is red across the heat map today. In crypto land, every major crypto in the red over the last, this is 24-hour performance here. So over the last 24-hour performance, it's just been nothing that's like down too much. I mean, I look at near down 5 2/3%, Avalanche down almost 6%, but Bitcoin and ETH, as I said the other day, I kind of look at anything, you know, if you're up or down around 1% and 1.5%, that's flat to me because crypto is so volatile. So everything is down today. What are you gonna do? Bitcoin going the same direction as tech, which is down. If you want some free Bitcoin, everyone, get it at Voyager. All you have to do is create an account on Voyager. When you sign up, use the offer code ZING, Z-I-N-G. Fund your account with at least $100 US and then make a trade. And they will send you $50 US worth of BTC. All right, AB, that's our wrap for the day. I think we covered almost everything. We didn't really talk about the vaccine stocks too much, which not for whatever reason, but ripped higher today off the open. Nielsen halted on a takeover rumor. They're getting taken private. And LSN. What else did we have today? Market continuing to leak.
Yeah,
I
I mean,
don't know.
that's been the biggest story of the day. I mean,
Yep.
at one point, the S&P 500 was up almost a full percentage point, and we gave back.
Can't hold gains, man.
Yeah, giving
Can't
back
hold
all
gains.
that. Like I said, we're in an environment right now where instead of buying the dips, you got to be selling the rips. So
That's a wrap. That's it. That's the story. All right. No live moon or bust today. We are doing a replay of our interview with the CEO of Star Atlas from, I think, a couple weeks ago, maybe a couple months ago now. So the crypto boys, I believe, I think they have a big one coming up on maybe this week or next week, this Friday or next Friday. But we're doing a replay today for Moon or Bust. That'll be followed by Making Money with Benzinga Pro at 3 p.m. Eastern Time. Jonathan Mallard just running through some trades you could have made today using Benzinga Pro for a half hour. I'll be back at 3:30 for At the Close with Joel. And hey, check out Benzinga Pro, guys. Pro.benzinga.com. Free 2-week trial for everyone. Get a discount using the code and the link in the description of this video.
And then I know Easy Mike was asking, just because I didn't know we didn't have a live moon or bust, so I don't mind going a couple seconds over. But Easy Mike was asking about a March Madness bracket. We do have a public Benzinga bracket challenge. It's through ESPN. I'll be sharing that on Twitter along with my bracket. So
let's fill it out. You want to fill it out like tomorrow or Wednesday on the show?
I was gonna fill mine out today and share it on socials.
All right, you do yours ahead of time. I'll do mine on the show.
Okay, I like
All right,
that.
cool.
And then yeah, Easy Mike, I'll be sharing that on Twitter. So give us a follow on Benzinga's Twitter if you're not already, so that way you can find that link and join our bracket challenge. There will be actually a pretty big prize for the first place in our challenge. I'm talking thousands of dollars worth of
Benzinga hats and mugs?
Yeah, thousands of dollars worth of Benzinga swag. No,
Damn!
thousands of dollars worth of Benzinga products. So I'm talking newsletter subscriptions, Option School, Pro, you name it, will be up for grabs.
All right, everyone. Catch you in a little bit. Stay green out there.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.